Morning, El. Morning, morning. Hola, hola. Buenos dias from sunny, beautiful Mexico. Oh, that's how my grandbaby says Mexico. Mexico. Good morning, everybody. All right. If you're here, welcome. Please welcome, welcome, welcome. Make yourself at home. If you're catching this in the replay, my name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, and mindset, particularly how to go from a scarcity mindset to a mindset of abundance. If this sounds like something that you're interested in, you have found your tribe. So come on in. We are a community, a learning community primarily of beginning traders and novice traders and learning traders. And some folks have been on the journey for a while. So you have some experts in our community as well, but all are welcome. We welcome your expertise. You will hear me throughout the day. These are just the musings of an amateur trader. I started trading about 4 months ago. And once I saw the potential, I just started screaming to all my friends and family, like, oh my God, learn this skill, perfect this skill, because you can actually make money at it. And it doesn't have to be very complicated. And so that's what we do here. We share. Hey, Marilyn. Hey, Marilyn. Welcome, 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 everybody. Don't forget, like, subscribe. Please subscribe, share, um, press the like button and all that other good stuff. And I'm going to share my screen with you. Of course, I'm watching QQQ. My intent today is to paper trade again, unless I see something like yesterday's move. I was listening to the futures market and they expect a down open today. So we'll see what the day holds. Let me get this screen up so you guys can see what I'm looking at.
Of course, we haven't opened. We do about 6 minutes from now. This, though, on the news of a CFPB ordering the company to pay $3.7
And that's what we're doing today, y'all. If it's quiet, we can, if anybody's got any questions or anything you want to pose to the community, feel free to drop your questions in the comments below in the chat. Other than that, I'm just watching. Y'all know how we do. Where's my phone? QQQ went down. It dropped quite a bit. And it's just been doing this crazy thing. I don't know if I can share it this way, if you guys can see it the same, but it's just going up and down, which is why I don't jump in first thing in the morning and I don't like leaving money overnight. It's just too volatile. It's just too volatile for me. So, you know how I do. I'm in and out. And I'm hoping to do the same thing today. Yesterday was nice. The tribe helped keep me focused. I took one trade, one active trade. I had one position I had to close out, but it was a good day. It was a good day. And I was just going through the chart. Let me get ready while I'm running off at the mouth. Hold on, folks. Let me get ready because it is less than 4 minutes. So I'm sorry. Hey, you guys, I'm going to pull this screen down because this is my account. So I'm going to remove this for just a second, and then I'm going to go in and place my orders real quick. So I'll be right back. You'll just see me. I'm going to pull the screen down. I need to go pick some contracts for today, so that's what I'm doing. Let's see. I'm going to try to place my order with the limits and, everything. Maybe I will, maybe I won't. I don't know. I don't know. Maybe not on this one because I need to practice that more. but this is perfect. Okay. Okay, what is this? Let me get this out of here. I need to practice, you guys. So that's what I'll be practicing in paper trading today. I hope, did anybody practice placing orders with stops and all that other good stuff? I better get a couple more selected.
Welcome back. Take a look at Treasury yields. We're having a role reversal here on the desk. Jim, if you can show him, is doing the reporting while I'm sitting here just talking. Yeah, look at that.
Okay.
But it's a pleasure actually to speak uninterrupted. Let's talk a bit about the Bank of Japan decision because that is having an impact, as you see, on the broad Treasury complex right now. Saying, hey, you know what?
Okay. So I have the orders already ready. I'm going to switch to this chart.
They may be buckling, and obviously heightened expectations that.
And then I'll bring you guys back online.
Bond yields to go higher. That's enough to get risk managers a little bit concerned. You've been working on the Wells Fargo
and we're
story.
ready for the opening bell.
Have anything to add on Japan and that impact?
Japan, look, I didn't. You know, the market was doing fine before the Japan reversal.
Is anybody paper trading or doing anything today?
Right now, meaning worldwide tightening means that worldwide level of commerce you got to go down on. I'm not sure about that. I think that we're in.
I don't know why that catches me off guard. Ooh, sheets. I hope you guys saw that. Oh my gosh.
Which is that you raise, it's bad. You don't raise, it's bad.
It's bad, it's bad. And we should tell people the news itself here, the Bank of Japan, in a surprise move, sort of widening its yield curve control policy on 10-year government bonds.
Oh my.
So essentially saying they can go
We off and running.
Okay.
We off to the races.
The Wells story is a little bit more convoluted than we've been talking.
Okay. You know what? I want to stop you there because we're gonna get it. We're gonna get an opening bell.
Yeah.
Let's get in the opening bell.
We got an opening bell, all right.
And then we got a bunch of other stocks that we want to talk about this morning, Jim. But I want to hear what your reporting found on Wells because that was the lead of our morning. Here at the big board, I should mention, and you can take a look at, of course, the real-time exchange. We've got Amplify ETFs.
Oh, wow. That's some volatility. Morning volatility for you. Ooh.
Doing the honors, they're supported by Tesla.
All
right, let's talk Wells Fargo. We started the show with it, of course, this seemingly.
Y'all, wait a minute. I'm going to just switch real quick.
$7 billion
Bravio. I don't fool with Bravio, but Tesla. I think Tesla gonna have it rough today.
So what have you got?
We gonna see.
Is the civil
QQ, get back over here and see what y'all doing.
You know what? That was heavily negotiated.
That time itself.
And that's behind them. It is true that there's a remediation of the other members that see it. I don't never want to put words in the consumer banks in the protectors of our country, but there is another, let's call it 350 million.
Wow. Did y'all see all those candles? All those different variations of candles in the first 2 minutes? It was a doji. It was a gray stone. It was everything. And I don't even know if that's true, the other one, but it has transformed 25 times.
Very big numbers because the market cap is 1.5. Because that's the number, that's the total that they think gets.
Morning, Frank. Morning, C-Bar. Down already, Sandra. Thanks for the credit spread video. It was excellent. Not much to add to it. Yeah, I was wondering if that was a good match for our topic for Wednesday.
Now we're seeing what that reserve was for, which is litigation. I put up the 5.5 because that's pretty much it, right?
Right.
And it's not reported yet. So that's the new.
Anybody paper trading? I'm paper trading after I watch the morning. I'm going to see if a trade presents itself. If it does, then I will participate. If it does not, then if it doesn't, if I can't see something immediately I'm going over the paper trade.
All right, then you have to write a check.
I need to look at
Then
those.
there's the rest, which
I
is
didn't
good in the
sell the
works.
paper
So it's a
traded
little bit
contracts
difficult to
last
explain that
night
they're
or at the end of the
lots of
day.
reports. Yeah,
I need to
like
see
that.
what they're doing.
And then the reason I come out with a 5.5 is the bank is basically saying, look,
Yeah, me
we
too,
have these
Frank.
other charges.
It would have to
We
be
have this
something very
litigation.
clear like
And there it
yesterday,
is,
you know.
right? And it's not just for
That was
for this
manna from
certain tax
heaven.
bureau. Okay, now where do I come out on this?
All right, where do you come out on this?
My chapel trust owns it. I think that any move greater than say 1.5%
morning,
overdoes
everybody.
everything that we've heard. The bank has had a horrible overhang, and I think that what you really want to think of. Once I had an executive who told me about a division that he had to sell because it was a division that was 20% of the.
Is there
revenues of the
anybody
company,
who
but was
needs help
35%
with
was done.
anything getting
And
set
what you
up
find
in
is that
terms
you
of
need to call them out.
think or
I think
swim?
that
Anybody
Charlie
need
Sharp's
any
problem here.
tech
This
support?
is probably 50% of his time, and 50%. That's my own estimation. Running, because it's like Zuckerberg. How much is he running Metaverse versus the rest of the place? 20-80, 80-20. I think what Charlie's doing, Charlie Sharp is a very fine banker, and he was great at Visa, great at JP Morgan. Bank in New York, more difficult to figure out what he did. But this is
Guess it's nothing to do
this
but
is
to
the
watch
beginning of
this.
the new Wells Fargo. It's just that it's an astounding set of numbers.
Yes.
And what it reminds you is, David, Charlie's been there for a while.
Yeah.
That there were many, many things wrong at Wells that we didn't even know about.
That's true.
At auto loans, rip off of consumers.
It has taken quite a while to get
Right.
deep enough to
But
sort of get to the bottom.
If it's 5.5 and it includes all the all the lawyers,
Yeah.
includes everything, then maybe the conversation will be about how the bank is doing going forward. And I know the bank has plenty of capital. I know the company can buy back stock. I think that Charlie's been playing with one hand behind his back the whole darn way.
Okay.
So 5.5 is going to be the number that people should be talking about. The 1.7 is the number people should be talking about. The 3.7 is not the number people should be talking about. That's the number that's in the consumer.
I'm glad we got that
I
wrapped
have
up.
Nike too, which was going to
Yeah,
be my
I
stock.
want to talk about a few things too.
I'm just looking at the support that I drew in there, and I'm watching how it looks to me like she's testing that very support. Like this is a retest. If it can't break through, I mean, or of this resistance. So we'll see. This might be a good place, I would think, to enter a put. Good morning, Shauna. Good morning, good morning, good morning.
Big surprise here. Musk
I don't
is
know.
actively looking for a new CEO of Twitter. And it doesn't take anybody.
Frank, what do you think?
As we've seen from his previous
This is
polls, oftentimes
it's a resistance that I drew in
before he actually asked people,
and it looks
to participate
like,
in said
let me look
poll.
at
And that
it
would appear to be the
over.
case
I'm gonna look
here
at the
as well.
hourly
From everything I've heard,
chart.
he has been actively looking, asking, trying to figure out who the candidate pool might actually be. Heard a lot of different names, but none of them enough so that I actually feel comfortable sharing them at this point. And I'm sure there are.
I can tell you, he's not going to do John Ledger.
Look at my
Shut up there
daily.
Not going to do John Ledger. No, I think that's fair to say. It's not going to be Jack Dorsey. It's,
But
you can go through a long list of people. It's not going to be Jim, but I do think it's interesting because, of course, he has told people this is, and he even said as much during his testimony in Delaware. It's a 4-month project. That's what he sees it as, and he's going to find somebody to replace him. He obviously will still be the boss in a sense, given he owns the company. But to the extent it takes any pressure off Tesla, who knows? But he's out actively looking for his replacement, so to speak.
All right, what would be the classic, hilarious replacement? Brett Taylor.
Yeah.
Good morning, everybody.
Bring in the former chairman.
All right, Marilyn, we'll see
He
you.
wants to do that.
I think everybody kind of bounces in and out. Is anybody else looking at this with me? Does this look like it's testing and retesting this
It's a
resistance?
great question.
Well, there goes
It's a great
that.
question. What do you need more?
I think you need
I'm just
There's
So many
asking.
different things to navigate there as the CEO of Twitter.
Because
and obviously
would it be a good idea to have an entry close to this? If you're looking at entering a put, would this be like somewhere near this resistance? If it proves to be a strong resistance, which I don't know. That's my rhetorical question, my novice question.
But integrating stocks integrating consumer packaged
You know,
foods.
and again,
Anybody
listen,
have any
what do we, the
idea?
latest
Well, I'm just,
research
I,
we
of
had
course,
is
I'm gonna be
Evercore
watching
lowering
it
their
to
price
see
target
what
on
it
Tesla
does,
to
but
$200 from
I
$300.
just don't know
And they
how
ended
strong
by
a
simply
resistance
saying
that
the partisan
is.
elephant in the room.
But what I
Investors
could
now
do is
fear
drop
U.S.
some
brand
Fibonacci's
damage
to
given
see.
typical EV buyer demographics. Roughly 40% just being from California, 70% from blue states in a dwindling backlog environment.
I'm gonna go to
And they
the.
go on from there, Jim. But there's no doubt it's been having an impact.
Let me get that. Let me see how much it really is.
What are you looking at?
I'm getting the numbers.
What numbers?
The impact.
What impact?
I have my damn sources on the impact, the EV versus who's taking share.
I see. Okay.
I'm trying to get it before the show's over.
All right. Well, I want to move on now to Disney. Can we do that?
Ready for that one, partner.
All right.
The little emoji that's crying.
I do like when you call me partner.
I know.
It makes me feel nice.
Thank you.
The Walt Disney Company, we got a Wells Fargo this morning. I thought it was interesting because they are saying just very squarely, we think you should think about
70,
spinning off ESPN. And we think you might. ESPN, traditionally the cash cow, is neither owned IP nor global the way the rest of Disney is, with linear and sports trends diverging from core IP, that's intellectual property. We think severing the company is increasingly logical. Now, we know former CEO Bob Chapek had decided against that. Right. And it had been brought up when Dan Loeb showed up some time back as one of the list of things that he thought the company should consider. Chapek saw a real opportunity in terms of sports betting and how ESPN potentially could be central to that.
But he failed to do that.
I do not have a sense as to where Iger is on this, but Wells goes into some detail here in terms of they think ESPN, ABC with linear networks is roughly $2.5 billion in fiscal year 23 OIBDA. That's operating income before depreciation and amortization. They could basically say, listen, if they can pull it off, RemainCo needs to trade at 16 times an enterprise value over EBITDA. That would be value neutral. Anything
Shauna,
above
please.
that would be value enhancing. They could send a lot of
Shauna,
debt with ESPN.
check out. Do you know who you're going to go through, Shauna?
We do think. I mean, watch ESPN.
Because
you realize that they have.
I don't know. I think they're all good.
I
nice
think that
big
they
red candle.
themselves have.
I think they're all good. The online free ones, I think they're good. Like TD Ameritrade.
I like the idea. I'd like to hear what Steve
the
Schwartz
OCC, OIC, they're closely related.
Steve Schwartz
but any of them, I found the information to be so
I'm
thorough.
so glad you mentioned that because we sometimes forget that Hearst owns 20% of this company, has certain rights as a result of that. And again, this
take a look. Even TD Ameritrade stuff is something that. What I like about them is that you can watch it almost all on YouTube. You can do it online.
By the way, if they are,
they just got everything. It's just complete. It is really complete. So check it out. Yeah, there are 2 videos that you can watch. It's one video that says TD Ameritrade and Fidelity, free classes, no bull. And then the other video is the OCC and the OIC, free classes, something like that.
Neither seems to understand the idea that the fourth quarter in NFL is watched because of DFS.
Yeah. TD Ameritrade is good too. And Shauna, if you have, you don't have to fund it, but you can open up a TD Ameritrade account just so that you'll have access to the platform, Thinkorswim. And you don't have to fund it to have access to the platform. So, I mean, I think if you want to use services and stuff, then you do, but it'll let you practice. You can do paper trading.
One of the reasons why the bundle has been
I think you can paper trade without funding it too.
At the same time, also holding it
Don't quote me on that one, but check it out.
Yeah, I don't be too anecdotal, but you'll have a play where.
It's a video, Frank, that I posted on the I posted it on the community tab. It's about long calls and long puts.
No one talks about the
credit spreads, I think. I can get it for you, and then I'll just drop it down here in the chat.
Because we don't really want it now, but then we discover it and we do like it.
Well, look at that nice big old red candle. Hold on, hold tight.
It's true.
It's like my wife. I'm watching some because I'm checking in on that
It might be
ABC
time to
show
move.
or that NBC
I
show.
hear you.
We never know about these shows that weren't for sports. And then we watch them and we kind
Yeah,
of like
Frank,
them.
I'm getting it for
All
you
right, we'll move
now.
on from Disney.
Don't
Jim.
worry,
We've
I
a
got
bunch
it.
of news I want to get to.
I got you. I got you. I got you.
Can we talk a little 3M?
Let me get that.
From
Let's
PFAS
see.
manufacturing. Let me share the news with people. I may not be having that big a impact on the stock, but
The
it's an
Forever
important story.
You mentioned the Forever.
3M this morning announcing it will exit all PFAS manufacturing by the end of 2025. It will discontinue manufacturing.
I'm going to put the
all
link down below
polymers,
for you.
fluorinated fluids, PFAS-based additive products, and will, it says, help facilitate an orderly transition for customers. Intends to fulfill its current, by the way, contractual obligations during this transition period of a couple of years.
I think that's it, Frank.
Well, almost more than that, really.
But you can look on the community
2025,
tab
2 years
too.
from now.
And so let me
As
go
our
check
viewers
this
may be
out
aware,
on the
of course,
3.
they're facing
What
numerous
do we got
lawsuits
going on
about
over
the
here?
environmental impact of PFAS manufacturing.
Ooh.
And current annual sales of manufactured PFAS about 1.3 billion. EBITDA margins are 16%, Jim. They do
Oh, I'm
expect to
sorry. I
incur
got
related
two
total
competing
pre-tax
things
charges of
going.
1.3 billion to 2.3 billion. And there will be actually, that will be also part of the fourth quarter as well. So,
sorry about that.
your view on this? You know, you and I have occasionally talked about this during the various quarter, or when we see something in court that rises to a certain level.
This is Forever Chemical Production. It's a key chemical to them. It has been caused groundwater contamination in many different places. Initially, they thought it would be contained in certain areas. It's all over the globe. Mike Roman, like Charlie Sharp, trying very much to put this litigation behind them. This one's going to be more difficult because 3M has been viewed as being a punching bag / piggyback.
Right.
I do think that the discontinuation of these PFAS chemicals was incredibly important, but I did not know how important PFAS was to their actual sales.
Yep.
So again, another one where we're glad that they put it behind them, but the cost of putting it behind them is high, and PFAS is not really the end of the litigation. Is putting it behind. PFAS just continues, and it does because groundwater is something that we know is forever.
Yes.
And so I think Mike's doing a good job. Can I just say one thing?
Please.
Mike Roman.
Mike Roman, the CEO of 3M.
Did not create this problem.
No.
And there's been a lot of skating for the people who worked there before.
Yeah.
But they, if you go back and read the first quarterly Q of Mike, it was the beginning of what he realized could be.
And they've done a number of different things, obviously.
They tried that $800 million settlement in Minnesota, but it's global. And I think it's really important, and a lot of it is it's kind of what what they use with the chemical in scrubbing. And,
correct.
What I feel badly about is that this has just been this is a Dow.
This coating is on a lot of stuff, PFAS.
Coating's everywhere. And, Forever
Jim,
Chemicals.
before we go, and, I feel like we haven't gotten
to
everything.
Where are we going? Nike, you want to get
to Bob Bassani. Lucid, did you notice this? They raised another $1.515 billion. 56.2 million shares of common stock. The gross proceeds there were $600 million. And then private placement, 85.7 million shares. That to an affiliate of the Public Investment Fund, the Saudis.
Then they'll make it.
Say again?
Then they'll make it.
Then they will make it. Yes, 1.5 billion will be quite helpful to them.
I think a lot of our viewers
consume a lot of capital.
Does anybody else look at the? You're welcome, Frank. Let's see if I can post that.
Yes.
There was a tremendous amount of money spent on finding the next Amgen.
Does anybody else look at the time and sales to kind of see what's coming down the pike?
Well, it's hard.
In this time and sales, I see some prices that are as high as
58.6% for the year. Shares of Tesla,
$268
billion market value, and didn't move higher at all.
39, 268.
Most people are already aware that Musk is actively looking for
David,
CEO.
I don't want to ask you for names. Can I just ask you what
does
the
anybody
names
use time and sales? And if so, how do you use it? I'm talking about this thing over here off on the left side. It tells you the price, how many contracts are either being bought or sold. Does anybody know? And how do you use that in your trading?
Good morning, Bob.
Good morning, David. Good morning, Jim. Good to see you both. We're fifth down day on the S&P here. We're in some serious downtrend in some major sectors. So we're down 5% last few days on the S&P. I just want to show you some sectors. And again, terms of risk on, risk off, ARC is in another serious downtrend going on. Semis are weak again here. We're waiting for Micron tomorrow. But banks and retailers, just awful December. I just want to show you some of these names. Nordstrom, Costco, Dillard's, the big department stores, they were all down 15, 20% this month. I mean, you can see flattish today, but this is a little bit unusual. They've had generally a terrible month for the retailers. Banks, the same thing. I noted some big regional banks never really recovered from that Goldman Sachs conference. 52-week lows a few days ago with M&T and some of the other ones, but we're down 10 to 15% in a lot of these names in the month of December. So there's a lot of big stuff that's in serious downtrends here. We're hoping maybe we'll get a little bit of reversal on some of the earnings. The early reporters that we had last week were not that bad. But the numbers are coming down. So fourth quarter estimates went negative several weeks ago for the S&P 500, now down 1%. October 1st, just to give you a sense, it was up almost 6%. So what we care about is not the absolute number, it's the trend, it's the delta. And the delta is going down.
Good morning, Ms. Vice.
Good morning. Numbers rather steadily. The same is going on for the first quarter, too. That's going to go negative within the next couple of weeks.
Anybody else trading today? Anybody doing anything? Paper trading? What you doing?
Now it's only up 1.9%. That's going to go negative
I'm just
in the next couple
watching
of weeks. That's what
because I am convinced now that this time in sales really does give you some insight into what's happening. And this is just me thinking, because I see some over here that the price goes up as high as 267.83. So I don't want to get in, because I think this candle is going to go up that high, or the green is going to, the buyers are going to be out there. These are sales and buys that are in the hopper. So I don't know. I'm trying to figure out how does that factor in. Hey, TJ. Good morning. Good morning. Good morning. Welcome. You guys don't forget to hit the like button, the subscribe button, and share. It helps. It helps me out. So I need somebody. If anybody knows anything about the time and sales, I'm gonna turn this down a little because I don't know. I'm going to study time and sales too.
As well, and of course they're talking about lower demand for DRAM chips, and a lot of that is already priced in.
But I see like 267.82, and I don't want to get in. I would rather catch it at the height and then write it down. I don't want to jump in now with a put, knowing that these, this price, these sales are waiting. Does that make sense? I hope it does.
A widening of its yield curve control policy on its 10-year government bonds.
And
many believe that will have an impact even beyond what you're looking at there. But it is having an impact on our market. As you see, yields are higher across the board. We're right back to this.
$66.73. See, that's what I'm talking about. Yeah, see, you could see that that's coming because you can see that in the time and sales. And so, yeah, I didn't see anything higher than that. Well, there you go. 2, 6, 7, 9, 2. Is time and sales an indicator of options liquidity? Need a healthy number of buyers and sellers? Yeah, well, it definitely represents price. Then this is the number of contracts. And then I want to say this is either the time that it executes or the time the order was placed or something. But they definitely represent buyers and sellers. I just don't know, if it's a lagging indicator, like this has already been factored in, or this is what's upcoming and I'm seeing it unfold. But to be honest with you, from watching it, it looks like what's over here is what unfolds. because I can scroll through here and you can see a range in price. And usually that range in price is somewhat reflective of what I've been seeing in these candlesticks. So don't anybody quote me on these. These are all observations, all observations. So I don't know. I think time and sales, I need to understand how it's used. But I'm telling you, I can, when I scan through it, and yeah, well, of course, QQQ's got plenty of liquidity. But just scrolling through, I can see the range in price. And so I'm thinking, how can I use that? Because if I see that the highest it's going to be like in the next few minutes or so is close to 268, and I want to purchase a put, wouldn't I purchase when it's high and then write it down? Just thoughts. Just thoughts. But I wouldn't do anything now with this big old green candle. I don't know what's going on here. But I will peek down on the one because that's how I roll. Let's see. So it looks like, it's about to go into maybe a little upswing, a little up diddle. Looks like the RSI is turning up, might be going up. This little green peeking out here. Looks like we got a little crossover, and this is waning, perhaps. So let's see, where are we? 26762. I think here was the move for the morning, if you had the stomach for it. It opened around 268.50 and got down to 267. That's $1.50 move. That's a good scalp for today. It's just, and that's about what it is too. Yeah, that's it. Let me look at it on the 3. That ain't the cleanest scalp I've ever seen, but guess somebody could do it. 268, 267, 268.50, about $1.50 in almost exactly 3, 6, 9, 12, 15, 18, 20 minutes. 20-minute scalp. I don't see no problem with that. Yeah, you can see how many shares each order is for. Yes. But I want to know, Frank, is this in real time? Is it in real time? I think it is kind of as close as it could be from what I can see. I'm going to keep using it because it does seem to help me seriously kind of know whether to hang back, because there are orders out there already for like 267.89. So this thing will be back down. I don't know. I don't know how to use that date, but I'm going to find out how to use it. Because looky here. See, I don't have the patience for that. I've seen that done so many times, that U shape. I've seen that so many times. Just why I just chill on the sidelines in the morning. Yeah, I'm going to see if I can pull it out a little. So we can see. Yep, it's the price. This is the size and the time. So it literally is time and sales. Oh, look at that. Looky. So let's see. What are the settings? Customize.
Nike reports after the bell.
I gotta go to Matt Boss, who's been so good for me. JP Morgan, he sees potential upside to revenue guidance, 20% this quarter. China inventory will be clean. I didn't expect that. North American inventory plan to be on track and unchanged. I did not expect that. So those are positive things. Now, of course, against that is that the market's off.
That's Matt Boss from JP Morgan. All right,
You know,
what do you got on Matt tonight?
I got Rusty Brazil who's going to talk about he's my best oil guy, and I think we have to figure out where the heck oil's going, because it's something that
Tesla
that year over year.
Everybody's got a little scribble scrabble this morning. Let's look at Broadview. They're down. Let's see. Yeah, that's crazy looking too. Oh, they had a when the stock gaps like that in a price, doesn't it have to fill that gap, or doesn't it seek to fill that gap? So to go from, let's say 549 down to 545, I don't know. Maybe that's not that big a gap for that stock.
Multi-billion-dollar settlement with the CFPB.
We'll see.
Of course, Jim's going to have more on it, I bet, on Mad Money tonight as well. You betcha. Keep it here.
Are you at the top of the time in sales? My time shows 9:58, the old laptop lag. Let's see. My time, let's see, shows 9:59 right now. But see, there's some time lag with with us. So that's probably not fair. Because as I'm watching it on my TV, you guys are behind me by, it feels like an eternity. So I don't know. But I know this is pretty too. Shoot. We like to make money going down or up. Up makes money just as well. So everything about this is okay with me. Look at this. That's our stair step pattern. We got green. We got some volume going. It's not oversold, overbought yet. It hasn't got to 70 yet. And look at this, nice open in the beginning. Hey, let's see. Where are we? 269. Yeah, we shot up just like that. 40. Somebody could have made it. From the bottom, 267. But that's so fast. Ooh, and she's still going. 267. Up to 269. That was a quick $2. And she shot through all of those. Let me just see what kind of resistance is waiting. She's about to bump into 269, 270. Oh, well, that was a nice little run. Up to 270. Let's see what happens at 270. I guess that's why you should put your support and resistance in, huh? So you'll have some idea. So I'm expecting that she should maybe hesitate at 270. If she doesn't hesitate at 270, sure, what's next? What's after 270? If she tears through 270, we going in. Because what's after 270? Let me see. Not much. Let's see if she slows down. Because I got some resistance at 270. 269.82. Okay, look at you. 269. So yeah, maybe that's some resistance at 270. But that was a nice little boop boop boop. 36912. That was a quick one too.
We're 30 minutes into the trading session. Here are three big movers that we are watching this morning. We're going to start with General Mills.
Also, Nvidia is green.
For its latest quarter, the cereal and
Google is green.
Forecast amid steadfast demand and
Amazon.
take a look at the stock.
Oh shucks, Amazon doing something.
Nonetheless,
Look at Amazon on the move too.
revving higher after the EV maker
But where is
raised more than $1.5 billion
Amazon's?
in a series of stock sales. But keep in mind, even though it's bouncing about 3.5% right now, it is down about 80% year to date.
Amazon.
And finally, we will end.
I don't trade Amazon, so let me get back over to my own backyard and do what I do.
US soil, Virginia specifically.
Okay, so she looks like she's testing. 26981.
Due to this delay, is now trimming its revenue guidance. You can see those
She
shares
sure
down
shot right up to
fractionally
it.
right now. They're down 66%. Have
Anybody
lost
else
about a
watching
third of their
this?
value since going public
Ford
in
went up
August
to
of last year.
MACD crossover. Yep, you saw the
Wells Fargo has been a
crossover.
feature for us for the last
But
hour.
if you see this resistance I have drawn up here
Multi-billion
at 2, it's
dollar
really
settlement
2.
to,
Oh,
that
shucks.
agency calls
Well, let's see. If she goes through and she
Our next
stays
guest
through,
named Wells Fargo.
I don't
Here's
trust
Tom
that
Pitts
though.
for
No,
2023.
I don't like,
Let's
you
get
know, I don't
into
like
it.
buying
We're
any
joined by
calls
James analyst David Long.
in
David,
this.
good to
This
have
ain't
you
my
this morning.
thing.
First, a reaction to
So
to
yeah,
this
look at
news
that
itself,
test.
as our viewers
Did
can
y'all
see
see
the
it try to
stock,
shoot
after
through
reacting
and then got
negatively a bit, is actually in
rejected
positive
at
territory.
270?
Sure. Thanks, David. Thanks for having me on the show this morning. So a little bit
And
of
back
a
down
surprise,
we
the
go.
magnitude of the charge
That's
for the
why I like
CFPB of
watching this. I'm telling
$3.7
y'all,
billion.
it's some
But I will say
science
it's
to this
not a
thing.
complete shock.
It's some
The
rhyme
stock
or
had
reason to
underperformed
this. This
month
is
to
not
date
just
on rumors
willy
that
nilly.
there was a
Although
large
I don't know
decline
anybody with
in
it.
resolution
3, 6,
coming.
9, 12.
3.7 billion,
I
obviously
know the way
pretty
it
large.
shot up through
But the
there.
company does have a reserve against this within their financial statements, within their balance sheet. They up
2,
that
6, 9, 6,
reserve
4.
up to
Ooh.
3.7 billion from 3.2 billion. Now, not all of that I think will be used for this, but it's something that
Maybe
I
a
think
good one for folks
management
looking to
team
get
knew was
into an
potentially
ETF
coming.
that is not expensive.
But
I need to trade that one.
as I said, this was something that was not a
TQQQ.
complete
I need to look
shock
at
to us this morning,
TQQQ
anticipating
myself.
the underperformance month to date. And I think this does.
Can we look? I'm going to
going
look at some contracts for TQQQ after we see if she breaks through. Because if she breaks through, y'all, I think we off to the races. But I can't imagine where's she getting all that energy from. What do they know that we don't know?
On the fundamentals at Wells Fargo?
Sure.
That was a serious reject.
When you look at the fundamentals of Wells Fargo, they are growing loans. They have a relatively good net interest
2,
margin
6,
relative to
9,
their
7,
peers. They've
3.
got good credit quality given the diverse loan portfolio.
Let's see if I
They're
see any
doing a lot of things
270s
right
in the
The other side is the ESG.
Oh
and
shucks, yes I
specifically
did.
the governance.
I saw a
And that's
270
something
in
that's been
here
a work in progress and has really accelerated since
in the
Charlie Sharp
time and
took over.
sales,
They still have a long way
but
to
a
go.
bunch of
This is a very
269s.
positive to get this fine out of the way. But there are still 8 consent orders out there, 2 of them with the
269.
CFPB. As those do come off, that does
I need
allow
to
the
see the
banks to
whole
continue to
price.
improve their operating efficiency because they are spending a
269,
lot of money investing in improving
61,
their internal controls to work past these issues.
269.
So it sounds like, David,
Whoa,
that you
whoa,
are
Pooh.
still bullish on this name going into 2023.
I'm sorry, is she
that
trying to go
correct?
above
And I guess in light of that, what do you think of the financials more broadly right now?
270.08.
Yes,
Ooh,
absolutely.
y'all watching
It is a
this?
stock that we liked into 2023.
I
And by the end of 2023,
don't
I
like
think some of
that.
the larger banks
Would
will
anybody
start
get
to
in this
outperform
trade?
some of the small to mid-sized banks. In the immediate
3,
near
6,
term,
9, 12,
I'll tell you,
15.
going into January,
I don't like
focus
it.
is still on deposit betas
Too,
and how
I don't
much
like
banks are going
it.
to have to pay to keep their
Is anybody watching
deposits,
this but me?
with their bank, and essentially what they're going to have to pay for those deposits. In the first half of 23, what we're looking for is the investor focus to move more towards
You in, Frank?
liability sensitive.
You in paper trading or?
Put up some
Oh
better
Lord,
net interest income
270,
when the Fed
23.
stops raising rates. And
I
then
don't
also
know.
credit. There's
I'm
concerns
gonna wait.
out there about the consumer. There's concerns out there about
Oh,
commercial
but
real
everybody
estate.
is turning
So
green. I think it's a bull trap. I don't even know what that is, but that's what it sounds like. Sounds like a bull trap. It's like where they sucker you in and then they clobber you over the head. Looking at put vertical. Okay.
Yeah, I mean,
One
so
call
just to take a step a
contract
little
on
bit more,
paper.
I mean, we've
Okay,
seen this
everybody.
broader market sentiment shift from
Yeah.
inflation to recession fears and slowing economic
I don't
growth. What does
know.
look like
That was
in the
a
next
nice
couple
little
of
shoot
years?
up.
Financials
But
and banks specifically
270
have been
for
pretty weak up
me,
in recent weeks. In light
she
of
would have to
that,
be above it for a
is
minute.
it
270.
overdone, or do you think
see?
that makes sense right now and thus is providing opportunities to buy some
But
of
she
these
sure
names,
shot right through it.
in light of that?
Sure.
But she's oversold, getting to be oversold too. I don't know. This is one of those. This one of those things. I don't even see. Bar, you're gonna have to show put us up on the put vertical. Hoo-wee.
And I do think earnings estimates probably have to come down for the
Look at
banks,
that.
broadly speaking. And then also a potential credit event where there could be some losses that come through. So those are the
See,
fears
look,
that are
I
out
don't
there
trust
that we
her.
need to work through.
270.
After January
She
and
shot
April,
through
we
one,
did a
shot through
couple
two. I
negative
don't know.
revisions to earnings estimates. I think you'll start to see
269.79.
the investors come back to
Oh,
the
wait.
banks a little bit more broadly. But I do think in the immediate near term, there are some franchises out there that are valuable. As much as we're more neutral overall in the banks, I
Yeah,
definitely
I'ma
think there's
definitely
opportunities where you can make money on some of the stocks that have sold off more so than others,
But
or that their overall long-term valuations are not appropriate just because of a near-term headwind. And I put Wells Fargo in that bucket, name a couple others, a First Republic, a Silicon Valley Bank, a couple other quality franchises that I think are undervalued here.
4.
Okay. David, thanks for your time. Appreciate it.
Thanks for having me.
7.
The Bank of Japan shocking global markets
70.
overnight, tweaking
It
its
gets
yield
up
curve
above
full policy.
70.
And our senior economics reporter, Steve Weisman, has more on this. Hi, Steve.
Hey, good morning, Morgan. Until now, the BOJ has been the odd bank out when it comes to tightening monetary policy amid higher global inflation. Now the question is whether the policy that it's tweaking now whether or not it's joining the tightening crowd. But this morning, the BOJ, Bank of Japan, surprised markets around by lifting its cap on 10-year Japanese yields to 50 basis points from 25. The effect has been global. U.S. stock futures plunged, then rallied most of the way back. Treasury yields surged and the yen strengthened, the dollar weakened, and on the move, which was generally not expected for several months. The trouble for understanding this move is that the governor of the Bank of Japan insisted this is about improving market function and maintaining
Yay, Frank.
yield curve
On the call. Good.
of a tightening cycle. Governor Kuroda saying at his press conference, quote, "Today's step is aimed at improving market functions, thereby helping enhance the effect of our monetary easing. It's therefore not an interest rate hike." The BOJ's problem had been that the 10-year yield was trading at the top of the range, or 25 basis points. Other maturities have been volatile as well. Japanese inflation, looking at that, has been on the rise, moving from deflation.
Good for you, Frank.
Now show positive rates, both headline and core, though core remains below the 2% target. Kuroda suggested the inflation comes mostly from higher import prices.
Oh, Maryland. I watched one of Chris Sain's videos. He's good. I like him. I like him a lot. Congratulations, Frank, on your paper trade. We take profits. We take profits. Yes, we do.
Market function versus policy tightening. Nonetheless, the move that we're seeing in the bond market in Japan right now, what does that mean? How does that translate to U.S. Treasuries and competition we could see here in this market and activity in this market?
Yeah, I think you hit the right word there, Morgan. It's competition. You have higher rates in Japan, so marginally higher rates. Look, the Japanese, the Bank of Japan owns about half of all outstanding JGBs, is my understanding. So there's not a tremendous impact in the private sector. Japanese fixed income investors tend to stay home. But yeah, there is this sort of knock-on effect where higher yields are we've seen higher yields in the United States, in part because of what happened this morning.
I see this. Okay, it's reversed. The time is reversed on mine. Wait a minute. 10:07, 10:06. I'm looking at it. 10:10. These are 10:10. I need to reverse that.
Over these next couple weeks because of the holidays.
Yeah, I see it affecting us in a couple of ways. One, it's a little bit of a test to have an overnight jolt into an illiquid market, a 3% move in the U.S. dollar-yen exchange rate, and let's see if something else gets knocked loose in the markets on that kind of a move. So far, it doesn't seem like that's been the case.
So these are the oldest orders, and these would be the
I think as Steve's been alluding
orders.
to, the way it has released other global
so maybe that's how they mean maybe already factored in. I'm gonna study this time and sales thing.
Had a very similar setup where they had pulled back to the highs that were reached in the mid part of this year, and now it seems like maybe that's just a short-term floor, and maybe we can rebuild toward that. It's not because of this necessarily altering the global central bank tightening story or anything like that. It just seems as if we're now have the anchor of Japanese rates is a little bit set higher, and that's about all it is. Now, when it comes to our stock market, I mean, I don't think that you want to see the dollar go down for this reason, but a weaker dollar has been compatible with our market getting a little bit of relief. especially when it is the, kind of the global earnings story is been, I think, a big worry point into next year.
Yeah, I mean, speaking of our market, Mike, and we're basically flat on the S&P right now. I mean, we came in again with quite a few down days in a row here.
Miss Vice, you're doing SQQQ. Y'all gonna make me look at SQQ.
Showing some signs of life, but sort of any thoughts, particularly as Morgan
Cause
mentioned,
I ain't fooling with QQQ till it settles
starting
down.
to get in the short term a little bit stretched. I mean, if you think about the high that we hit in the S&P 500 on the celebration of the good CPI report, that was a week ago today, 4,100 to the penny. Yesterday's low, 3,800 to the penny. So we see, it seems like the market wants to try to test, see if this is a range that we're comfortable with. Valuations continue to bleed out of the most expensive, popular mega cap NASDAQ stocks. That's been a constant all year. That's been a bit of a weight. The rest of the market has found a way to kind of stay supported at the lower end of this trading range. I think that's what we're figuring out right now. If that's going to be something you can bank on or not.
Yeah. Speaking of banks, Steve, I just want to shift gears a little bit because to go back to the conversation we were having with our banking analyst just a few moments ago, one of the things he mentioned was the possibility of a credit event. The non-bank lending portion of that market certainly been getting more attention.
Back later.
I think in recent days, recent weeks, and then just yesterday.
See you, Marilyn. See you in a little bit.
Things like private equity. And some of these areas where
good luck, Miss Vice.
Another shoe to drop.
I hope you make some money, tons and tons and tons of money.
In the midst of this Fed tightening cycle, and whether central bankers are watching some of these, dare I say, more shadow credit areas of the market pretty closely in light of that.
I think they're watching them, and certainly somebody's going to go broke in this process. Somebody was out there long, forever low rates and is going to get caught short. Some folks are going to have to refinance into higher yields than perhaps the business that they financed before can withstand. The key to look for, Morgan, from my standpoint, is to look for tentacles of this lending back into the banking system. So far, so good. It looks like crypto did not come and have
you see that retest?
Big losses inside the regulated banking
Can't get
system.
above 270.
Bonds, which have a big refinance shelf. It looks like 24 and 25, but not next year. I've been looking at commercial lending. They have, probably the office space is the one that's going to be hit the hardest. I see a big shelf again down the road, not so much next year, but there is going to be office space. There's going to be corporate bonds. There's going to be all sorts of stuff here, David, as you know, and in the private equity world, that's going to be displaced and perhaps in a dramatic way as a result of these higher yields.
Yeah, without a doubt. And you're right to focus in part on commercial real estate, certainly empty office buildings. That's actually a subject we're going to get to a bit later in the show. Steve, Mike, thanks to you both.
Sure.
As we head to a break, let's give you a roadmap for the rest of the hour. That includes the latest involving FTX founder Sam Bankman-Fried. There's been another bankruptcy hearing underway this hour.
Plus, streaming stocks struggling in the month of December. This year, names like Disney and Paramount are down more than 10%.
Does it look like anybody else that 270 is a pretty strong, or at least it's a resistance for QQQ at 270?
We've got a big show still ahead. Don't go anywhere.
Oh, but it can sure get above it. I'm going to peek over SQQQ because, shoot, I need to see this. SQQQ. See what SQQQ is doing. Ooh. Look how nice and clean this is. 3, 6, 9, 12, 15. 52, 59. These contracts have to be a whole heck of a lot less. I'm just going to go peek and see what a contract would be. I put a really good contract, like way up here in the money. Whoa. I'm just going to check the price on these. Hold tight. Let me see. Those contracts are pretty pricey. Wait a minute, I'm way up in there, but it's $1,000.
The stocks of media
900.
companies like the ones
Hold
you're
on,
looking
let
at right
me
there that rely on direct to
let me
consumer
find
and
another
the ad
one.
market. Well, they're
Let
having
me
a
don't
rough
go
December,
so deep in the
mention a rough
money.
year. Joining us now on set at the NYSE is Barton Crockett of Rosenblatt Securities to talk about this and what to expect. Barton, nice to see you in person.
Happy to be here.
It's been a brutal year. We can look at all your charts.
Okay,
Going into next year,
600.
what's the conversation with clients? What changes that conversation with Barton so that perhaps there's a more constructive future for some of these stocks?
Well, I think looking ahead to next year, it's hard to feel like things are going to be much better. In fact, the setup is a little bit more concerning in a couple of ways. One of which is, if this economic reset continues, we actually see job losses, the ad market's going to inflect weaker. It's very kind of correlated. So, if you think it's tough now, wait till what happens, next year if the economy truly softens. I think that also is a headwind, I think, for subscriber growth. We're starting to see signs of saturation in this market. And the consumers, spending on, particularly in the second and third tier streaming services, subscription services, there's a lot of questions around, how strong will that really be? And then
hello, everybody. Welcome. I trade
shares,
shares, so I need a stock that is going up. Oh, when the NASDAQ is going down, QQQ and SPY, that means QQQ is going up. I see. Oh, so you don't do options. I see. QQQ could be doing that head and shoulders pattern. We're going to see. Okay, that makes sense, Ms. Weiss.
That question, can it exist? I mean, can it? We've asked it for years now, but investors.
Okay, but y'all see how QQQ keeps retesting this might as well say 270, which makes sense to me because in my experience, she tests every dollar. 269, 270, 280.
I believe that Disney, as troubled as they have been, their stock over the past month as their leadership team.
I don't know what it is about that.
They have a brand proposition. They have a way to leverage that in other ways.
Since she's just sitting there testing,
resonance with the consumer that I think can work.
I guess I could prepare a conditional order. No, ma'am, I still struggle with wrapping my head around options. I know, but I think people overcomplicate options. I really do. I think the thing is get in, get out, pick a good contract. Pick a good contract, get in, get out. I think that's the key to it. But look, y'all, I made this candy. How many people ever been to Louisiana ever had praline candy? I made some praline candy yesterday, y'all, and I promise you this candy is like crack. I can't stay away from it. It is so good. It's such a simple recipe. You make like a caramel and you put fresh pecans in it. Oh my God. I'm going to have a teeny tiny piece. We need to learn how to set up the scanner. Yes. It can pull stocks based on your criteria. See. Yep. We need to learn all of this. These all sound like great Zooms to me. I think we need to learn all of the things so that, you can pick and choose what strategy you want to use or what strategy works for that particular time.
something that is
So
pure strength.
since QQQ was playing
So are there any
around
stocks that you like as we have
to,
this conversation right now, or are
oh
you
shucks,
steer clear
playing
of
around
cautious
my
going into
foot.
2023?
Holy
Well,
smoly cannoli.
the stocks that
See,
I'm most
would you
favorable
call that a
towards are kind of
breakout?
adjacent to
That was,
trading.
she
So
sure kept
I like,
retesting it. I was
Frank
watching
Brace
to
with horse
see.
plays. So I'd like Liberty Braves.
We're gonna see if she stays
you know,
up
kind of a
there.
niche play.
270,
I think
because
that
she can,
the Formula One
let's see,
business
270,
is a good play.
55. If she can
Life
stay
Nation, I
above
think,
50,
is a real play on
then
kind
wait
of
a
the heightened
minute.
celebrity
Oh
culture.
shucks,
Again,
63.
kind of
So you're in
streaming
that
adjacent.
Liberty
Let's
family.
see if we can get another
Yeah, I think the
candle.
Liberty
Ooh-wee.
family, not all of it, but much of it, I think, is well positioned. And I think that the within streaming, I think there's an opportunity for Disney. You know, I think that their ad play, you know, unlike Netflix, they're going to get a lot of people signing up for their ad tiers. They're going to have a lot of ad volume to sell. So I think that will be a meaningful increment.
Let's end on Netflix. You
Yeah.
say, unlike Netflix, what is your sense in terms of the success so far of the
So now
ad
after
tier
this,
there?
I would definitely need a
Market has been
confirmation
responding
candle
to
that she
some
could
of the
stay above
stories, data that's
270.
been out there
Because I've seen
negatively
QQQ go up as high as
Yeah,
like
look, I never bought into the
270,
idea that the advertising was gonna be a
56,
big
and
increment
still
in Netflix
crash right back
because
down.
I didn't buy into the
So
idea that they were
I want
putting
to
up
see if she can
an ad
hold
tier that many people would want to sign
above
up for. When they
270.
initially announced
Get
this
another
basic
candle
with
above
advertising,
270.
where you only get one stream, you don't get the full high def, you don't get to download it, is something that not many people kind of want to sign up for. And I
Oh,
thought
you can't
that
take your eye
that would
off of
be a
this tricky
disappointment
beast.
relative to where people would,
But I was gonna say I
wanna
should
play into
probably
the
have
right
my
now.
orders
We'll see where
set
things go
up
with the
and ready to
advertising
execute. But
next
this
year.
isn't anything
There's
like what
potential
I
there
this
because
is
this has
not
been
my
an ad-free
trading
business
plan. So
and ad-free
that's why you
management.
see me just
So
kind of
I
watching
think,
this.
you know, I'm not sure that they're
I
really
don't
committed to going all in
consider
advertising.
myself to have
Like
a
Disney was
put
just a lot
bias, but
successful Hulu and can translate that
I'm a little shaky about buying calls in a down market like this because, you know, why fight the
Yeah, those
feds?
Nicholas Sparks
I ain't
movies.
fighting.
Woo. Tear jerkers on Netflix right now. As we head to break,
All right.
Gilead Sciences
They're taking a
is
break
under
and
pressure
so am
after
I.
announcing that its Kite unit will acquire biotech
Okay.
firm Tmunity Therapeutics. Gilead warns that the deal could impact its 2023 EPS by 18 to 22 cents per share. Shares are down 3%. Stay with us.
My candle is burning out of control over here. It's like a little forest fire. Control yourself. Yeah. Wow, look at that. From 267, that's 3 whole flipping dollars. That was the doggone move. I don't know. We'll see. How are we? Okay, what we doing? This might be one of those times, like if this red candle coming in can't get below it, where resistance becomes support. If this red candle now can't get back down through there, what was formerly a resistance could now become a support. Mm-hmm. I did not know.
It's rated PG.
QQQ's up 32 cents.
Welcome back to Squawk on the Street. We're watching shares of Maxar this morning, and we have been watching them for a few days. They're up fractionally right now, up 110% over the past week. The stock shot up on Friday by double digits following news that the space imagery and infrastructure company
Tesla
will be
was
taken
sure
private
be
by
easier
Advent
to figure out.
in a deal valued at $6.4 billion, including debt. 129% premium versus where Maxar closed the day prior. Private equity led deal, raising some eyebrows in the industry, but Advent's chairman and managing partner David Mussafer telling me that with over $28 billion invested just in defense, aerospace, and cybersecurity in the last 3 years alone, the firm sees value in this deal.
In the context of a public company, some of these businesses are really lumpy. They've got big capital expenditure cycles. They've got elements that are hard to predict, like when the next launch of the new Legion satellites will occur. And so some of those things create uncertainty in the public markets. But as a private investor, we're willing to be patient and make sure that this company gets all the capital and opportunities at the right time frame to make these bigger opportunities happen.
Well, Maxar has become more of a household name this year as a provider of many of the satellite pictures
Hey,
the public
Bumpy.
has seen of Russia's invasion of Ukraine and the battle that's playing out there. It's also in the midst
Tesla
of a
moves,
multi-year
but it has
turnaround, though,
to
and more
go
capital
up
could
or
mean
down
faster
$5
deployment
or more
of that next-gen
to make money with
constellation,
options.
Worldview
Yeah,
Legion.
but Tesla used to be a mover.
These are
When I
really
tell you Tesla could go up
complicated
$20,
systems.
I made a whole
So
lot of money on
obviously
Tesla.
the proverb, measure twice and cut once.
Morning,
Once these are in
Bumpy.
space,
Morning.
This requires a tremendous amount of
We
work.
watch.
And you
We
simply
watch.
are going to have some of these type of delays when you're dealing with this type of complicated assets. It's part of why we think in a private context that we can make sure that this company gets all that it needs and the time to successfully launch
Okay,
these.
so maybe 270.
Everything
This
in the context of it
has
going
now
private
become a
is
support.
competitive
Maybe.
in a certain way. And
That's
so for us,
test.
we had to
test.
craft what
We'll
we
see.
felt like was the right price for the
What it
shareholders
do?
and a fair price for our shareholders making that new
Cool.
investment. And in this case,
70,
we felt like
43,
that was the
okay.
right price for Maxar. It certainly represented a significant premium, and it's a great reflection on Dan and the management team.
Ooh, that's
All right, well, you
nice.
can catch more of our conversation on
I don't know.
Space, my podcast, wherever you get your podcasts. And we go into much more detail around all of that and details of the deal, David, including that 60-day go shop period that's attached to this as well. I
believe all of that is affecting
there's not going to
Tesla.
be another bidder that comes in with a higher
that
price.
was
but we'll
quite a
see.
premium. It seems in some ways hard to imagine. Obviously, 60-day go shops are typically a part of many go privates. Were you surprised at the premium? I mean,
Yes.
you know the company fairly well. I don't know if you'd heard
Oh,
about
well,
any cover
heck,
bids
I've
or anybody
seen
else
this
that might have been
before,
there.
y'all.
But give me
The
some
only thing
sense
that
here.
troubles me, look, I've seen these
Well,
spread like this.
I mean, I
I've
think
seen
there
this
had
up to the
been,
sky. I've seen
there had
this.
been whispers that Maxar was for sale for
I don't know whether
a
to
while.
brace for the
It's also
long
my
up
sense from a few folks that I've spoken to that
or
maybe other
to
companies
be,
had passed
or are
over
we perfectly
the company. Other
positioned
folks
for
in the industry had
puts
passed
for
over the
when it
company because
comes,
of
when
that
it turns
price.
down? I don't know.
But in this particular case for Advent, which has $89 billion in assets under management as of the end of the third quarter, and has a number of other aerospace and
I don't
defense
even know what's
names
next.
within that portfolio. I think, as was sort of just touched on there by Mussafer, they see this as an opportunity, I think, to expand their footprint in space, which, secularly speaking, despite a possible macro downturn, is set to grow and grow pretty aggressively over the coming years. When you look at things like defense spending and other aspects of government spending,
71,
and the
that's like
like.
$4 up. I
It
didn't
was a
see
big
that.
number,
Did
but
anybody
again,
see
they
that
seem
coming?
confident
I didn't see
they
that
can
coming.
make it pay
And it
off.
still goes.
All right, let's move on here. Time for a news update. Contessa Brewer has that for us. Contessa.
Hey there, David. Here's what's happening at this hour. A strong 6.4 magnitude earthquake has rattled Northern California. It knocked out power to more than 70% of Humboldt County. At least 2 people have been injured. County officials are reporting widespread damage to buildings and roads. We'll watch this throughout the day. In Ohio, a statewide Amber Alert is in effect for a missing baby after a car was stolen last night with twin 5-month-old babies inside. Now, one of the babies was found early this morning at the Dayton airport, some 80 miles away, in a car seat, wrapped in a blanket, but outside. Their mom says she left them in the car with the engine running. She ran into a pizza shop and she turned around and she says they were gone. And on a different note, massive crowds in Argentina.
I don't know what to do, y'all. Everybody is turning green.
Final. Argentina's president declared today a national holiday. In Buenos Aires, more than 100,000 people gathered in the heart of the city for a parade to honor the World Cup victors. And then atop the obelisk, a guy was up there waving this Argentinian flag, one leg dangling in the air more than 200 feet above the ground. Nothing says a celebration like the risk of death. Just saying, Morgan.
I'm getting like nervous
just
looking
goes
at that
back down to
270. I also just have to say, with all of our blue on the desk, it almost seems like we're kind of celebrating Argentina, even though maybe that wasn't the intention.
It's all right. Brewer. Go ahead, lean into it.
71.
We'll do it. We'll do it. I mean, Messi, come on. All right, thank you. As we head to break, mixed data sending some housing names lower. We're going to talk with the CEO of one of the country's largest home builders. That is coming up next.
I guess now people are taking profits, which would make sense. This red candle coming in. I'm stunned. Must be sweating some beads. Yeah, he asked, did they want him to resign? And the people said, yes, please go home to all those babies. Bought a put vertical, banking that SPX will close above my strike price. Well, you see me sitting on the sideline scratching my head. 271. Okay, I'm trying to see if it's gonna hold at 271 because Lord knows I missed all the entries. I missed the 260. I missed here. I missed the pullback, and I could have entered maybe here. I don't know. This ain't my thing. So now I gotta watch. Okay, well, that was somebody's money. Look at that. 67, even up to 70. Went up to 71, 67, 69, 77, $4. Shoot, didn't take long either. About 40 minutes. 270, 90. This taking my time is new, but I'm telling you, sure is saving me money.
Warby Parker app.
Being patient.
Welcome back to Squawk on the Street. New home construction and building permits declined again in November. Single-family home building dropped to the lowest since May of 2020. Joining us now to discuss the state of housing, Taylor Morrison, Chair and CEO Cheryl Palmer. Cheryl, great to have you on the show. And I do want to get your thoughts on some of the housing data we've gotten and what's poised to be an even busier week in terms of that data right now. Specifically, I want to start with excuse me. I want to start with the numbers we saw this morning and what they're suggesting about forward demand as we look to 2023.
Well, thanks for having me, Morgan. Really nice to see you.
I'm having a little success with buying
this morning, I don't
the
think
expensive options with the higher probability. I always do.
Really dig into them, but
I always buy the best contract I can afford with the most time,
but just
you
a little
know.
bit
But this is
sequentially. Permits were down a little
271.
less than
Okay, so
that.
we can stay above
I think more
271.
than anything, it's
I don't
very
know.
hard to take 1 month of numbers and arrive at some real conclusions. I think there's a
270,
disconnect
88.
for what we're seeing happening in real time in the field and the lag effect of those numbers. Builders, for the most part, I think are aligning starts, permits, obviously before starts, to what they're seeing in the field and sales demand. And then you obviously also have the seasonality that certainly is back into the business as we move into the holiday season.
So it sounds like what you're saying is that you're seeing in the field, you're seeing a slowdown, and maybe a slowdown faster than expected.
I think we've been seeing a slowdown.
I think this thing is going to keep going.
Accelerated early in the fourth quarter.
Just from the way that these are spread out, I know it takes some time for those things to get back together. And this is a little troublesome because it's in the trend, but the way it breaks down, breaks away, breaks down, and breaks away, it's that hop thing.
Entered what I would call a housing recession.
It took me a minute to recognize it, but I'm going to try one
because there's
call.
a good deal of inventory in the new home market that's been being built since early in the year. Very different than what we're seeing in the existing home market, where we really are somewhat constrained from an inventory standpoint. I think what that means is
with the highest probability,
we should expect that
and take profits quickly. Well, hold tight, y'all, because I'm about to go into my accounts. I'm taking y'all offline, so you're just gonna see me for a bit. I think I'm gonna buy one
under pressure, and just as importantly, what does it
call. I
mean
never
for
buy
builder
calls, y'all.
incentives?
Really, to be honest.
Absolutely. Pricing has, I think, been moving down a bit since I would say early summer. And then I think the pace of some of those incentives or adjustments has continued as we've moved into the fourth quarter. But the way I would look at it, Morgan, it's actually a wonderful opportunity. It's actually a wonderful time for the consumer to go out into the market. Because if I roll back to last year or even the spring of this year, there was no choice for the consumer. It was difficult for them to secure a home. It didn't matter if we were talking in the resale market or new. Today, there's actually product available. A consumer has choice of lots. They can really build the home of their dreams. And at the same time, to your point, the builders are helping them. I think you're seeing that through incentives that are really focused on the finance side, and it can be rate buy downs. It can allow you to ease into a mortgage rate over 2 or 3 years, or it can be a permanent buy down. It's really good, responsible lending that we're seeing. And it allows the consumer to have full transparency and understand what their mortgage payment will be for years to come.
Just in terms of the mortgage piece of this puzzle, I mean, I remember I bought my first home in 2005. I locked in on a nearly 6% mortgage, and I was feeling pretty good about myself. After more than a decade of easy money policies and exceptionally low rates, when you have the Fed chair coming out and saying that rates are going to be higher for longer, does this feel like a tight environment, historically speaking, or does this feel like more of a return to normal, historically speaking, where mortgage rates are concerned?
Well, I think you have a whole generation of consumers that have never seen rates, over 4 or 5% up until recently. I think the Fed has been very clear that, he has to curtail inflation, and that home builders and home ownership is kind of in the crosshairs of that, and that a 6% rate, if you look at any long-term norms, is actually a very good place, and certainly compared to what we saw 2 months ago when rates were approaching 8%. But having said that, a consumer buys payment per month. And if you think about what happened over the last 24 months, the consumer was able to buy a much larger house because rates were so low. So we really need to see both rates and prices stabilize, normalize. And I think as we start moving into 24 and the Fed has already started easing back, I think we'll find what that normal is. Morgan, it's not as much about rates. And I know that sounds odd for me to say that. It's really about confidence and the consumer understanding where things are going. And I think once they have some visibility into what's happening on a more macro level, once they know the Fed's not going to continue to keep going. I mean, we saw 475 basis points hikes in a matter of 4 months. That's unprecedented. So if you think about the consumer and trying to decide what's the right time, they needed to get some normalcy. And then I think we'll see a rebuild begin to happen.
Okay, Cheryl Palmer, thanks for joining us today, CEO of Taylor Morrison.
Thank you. Take care.
45.
After the break, the latest involving FTX founder Sam Bankman-Fried, with another court hearing underway in the Bahamas. We'll give you the details next. Don't go anywhere.
I'm studying it, Frank. I'm studying it. I'm going to show you all what I'm looking at. This is on the, let me look at it. Okay, on the 15-minute, it says, let me look at it on the minute. Just looking. I'm just looking, y'all. I'm just creating my closing order. Buy the close. I don't know what that means, C-bar. I'm looking at QQQ on the 5. Hold tight. Okay. I'm looking at all the time frames, y'all, because I need all the intel. Even the TV is quiet. I don't know what's happening there. Okay, I can't make a decision.
That's Kramer Guide. Yet another day of chaos in crypto. FTX founder Sam Bankman-Fried is expected to surrender to U.S. extradition. That's in a court hearing that may be getting underway in the Bahamas. Let's go to Kate Rooney, who can fill us in on exactly what is going on right now. Kate.
Hey, David. Yeah, so court is back in session in the Bahamas after a pretty chaotic hearing there yesterday. We're told by NBC News that Sam Bankman-Fried has not arrived quite yet. Unclear if the former FTX CEO will be there in person today, but his Bahamas-based lawyer
Good morning.
did show up. Today's hearing follows
Winning
a
in
pretty chaotic
education.
one
Hey,
yesterday.
Kay, how are
Bankman-Fried
you?
was widely expected to waive extradition.
We're trading.
And be
Everybody
immediately
else, I think, has
sent to the
executed
US.
their
That
trade for
didn't
the day.
happen.
I
Instead,
haven't
there
jumped
appeared
in my
to
first
be a
one, so
disconnect and a lack of
I'm
communication
watching.
between his Bahamian and American
I'm being
legal teams. His
careful,
US
which is
attorneys
normally
declined
not
to
how I
comment, but
roll,
NBC
but
News also tells
today
us
I'm being very
that both
cautious.
sides
So let me
voiced
show you all
confusion
what I'm
yesterday in
watching,
that courtroom. The
because
hearing
I'm
had been
just going to
scheduled so
wait a
Bankman-Fried could
little bit
accept
more.
extradition, but his lawyer said that his client first wanted to see the indictment against him before making any decisions. And the local defense attorney said he was surprised to even see Bankman-Fried in the
I'm a
court
back
at
away.
all. At the end of the day,
270.
his local
I heard
defense
Marilyn
reporters,
pass this
local
on to me, and
reporters,
this was in Chris
his
Sain's
client had
video.
agreed
And I
to
think he said, if you're in doubt, just sit it out.
quote,
So I'm just
the
going to sit it out.
strongest
Maybe,
possible
you
legal
know,
advice.
because that
That is
morning
what we
move
expect today. So a source
came and
confirms
moved
that
without me.
Bankman-Fried is
I didn't
expected
catch
to
this morning
accept
move
extradition,
because y'all know
and
how I
when
feel
that
about
happens,
trading
we'll see.
first
He
thing
would
in the
be flown to the
morning.
US for a bail hearing.
But
He
truth
was
is, that
denied
was a
bail in
great
the
move
Bahamas
right
last
there.
week and has been
I didn't catch it. And so I don't know what this thing is going to do. And so I'm going to watch. I'm just going to be a watcher today. I don't know if I'm going to be a trader today, but we'll see. We'll see if she continues to hop up, because she's kind of cooling off now, or if she's going to go into her afternoon consolidation. But for her to go into consolidation, she's got to drop, because these got to get all tangled up with all that unofficial trader talk. These, the SMAs.
Kate,
So
you know,
we'll see.
If he comes back, which seems likely, he's going to be in New York, right? He's going to be held here, I believe.
RSI is going down.
That is what we're hearing. And
price
too
is
soon to
coming
say,
down
based on what happened yesterday and some of the confusion, and there's a lot of skepticism that this will get underway. But if things go as we're hearing, he would get extradited, would have a bail hearing. So that's the big thing.
I wonder if they're going to bounce off of these, or is it going to cut through these?
Differences of
Will it cut through, come through those
likely to
and
get
come
out on
back
bail.
down? Because we've got the
high-profile white-collar crimes. You think of
RSI,
Bernie
let's
Madoff,
see,
Elizabeth Holmes,
60.
they all were released
it's
on
up.
a bond. This case different in a lot of ways, but
I don't know. Maybe they'll bounce, and maybe this is just a little relief to keep chugging on up.
Space. I mean, there's a lot of speculation swirling.
Let's see what's
that
happening on the 3.
Other exchanges in trouble in light of this, and just
see, that's what I think. I think this is just one of those up and shimmy over to the thing, pop up, shimmy over to this thing, and pop up and shimmy over.
Any sort of sense
we'll see
of that from your reporting and from your standpoint?
Because that's what it did, and it's ready for another little
the CEO
pop up,
on our own air. He
maybe.
has said that this is not the case, but Binance is now one of the biggest
But
exchanges
I'm waiting to see.
in the world because FTX is no longer a player. Binance has about 75 or 80% of global trading volume. There's a lot less trust in this ecosystem,
here.
so they've had to come out with things like proof of
63.
reserves. But last week we had some of the
happening
auditors
on
that
the
were working with these
1.
exchanges say that they are no longer working with any
Welcome,
crypto
everybody.
companies.
Please don't forget to
So
smash
any of
the
these exchanges are
like
looking for
button. I
someone
got to
to
do it
back them and
myself.
say, hey,
I hit the like
we
button
can vouch
myself.
for these guys. Now that the
Oh my
auditors
gosh.
don't seem to want to get involved, it's becoming even harder.
There are 20
For a
people
lot of
here. We only got
questions
12
on
thumbs
who's
up. Hit the
solvent, who's
thumbs.
not.
Hit the like
And
button,
that's really
folks.
something people are looking
Like,
for. A lot of
subscribe,
folks have
share.
pulled their money off
Y'all
of
watching me
exchanges.
sweat it out.
All right.
Okay, let's see.
Thank you. As we had to break.
Yeah, I think
check
this might be one
on
of
the markets,
those.
with the Dow
The
up
bounce, I
153
don't
points
know
right now.
though.
The S&P up 14, 38, 32. And the NASDAQ higher by
78.
a third as well. Or a third of a percent, I should say. We're back in 2.
Okay, let me get serious about this. 3 minutes. I can't tell here. That's one of them fakey outs that they'll never cross over. Guess I'll just have to wait. Wait. I think she has made up her mind what she's going to do today. Maybe it's just going to be an up day. These folks are all green. Let's look over here. Market watch is looking pretty green. Okay, folks. I think I'm going to go on in and get my one call for the day. I'm not going to do too much, so hold tight. I'm going to take y'all off and go purchase this one call. I'm going to look at it. 270.39. I'm going to see if it holds here, and then I'm going. Yeah, I think I'm going to go ahead and purchase this one call and see what it does. I'm going in, one call. And let's see what we can do. Chart. I went in around 270.60. Okay. And right away, we're profitable. That's always a good entry. That's a good feeling in to be near support. Okay, well, we off to the races. Okay. We're in it, and with one contract, we are already positive. Okay. We'll see what happens, folks. We'll see. Let's see if she can hold that support. 72. See what she wants to do. She's going to keep on hopping up. If not, then I will cut baits and get out of there. But so far, so good. Hey.
Welcome back. The SPAC boom has fizzled as growth has slowed in the broader market. A piece in the Journal this morning, the latest to take a critical lens to Palantir specifically and its SPAC investing strategy that resulted in more than $400 million invested across 20 startups.
All right, y'all.
And as strategy, I should note, has since been scuttled. The Journal calling the software company a, quote, high-profile casualty in the SPAC slowdown. It's a key reason Palantir stock
and
is
I got in
down
around
270.60.
So as long as we stay above 270.60,
on the commercial side of the business.
we in the money.
CEO Alex Karp telling me at the Reagan National Defense Forum earlier this month
We in the money.
That in terms of how Wall Street views the stock, that Wall Street has had it out for tech and growth-oriented business overall. Take a listen.
I think Wall Street largely understands we're a tech company and punishes all tech companies right now. The interesting thing about Palantir is all of our products historically, whether it's our Intel product, which the mapping toggles, it's the AI product that's now changed the world. The product that we built to for distributed vaccine have been 5 years ahead of.
Is everybody done for today, or I'm the only one still in?
Is 5 years ahead.
I don't think I'm gonna be in here long today, folks. I should have just went on and got them 3 contracts and been done with the day. Because she's doing just, I think she's gonna, well, we're gonna see. Don't be projecting just yet. Don't be projecting just yet.
Its government focused products, and despite us decelerating, depending on how you slice the data and whether you go ex-SPAC or not, a decelerating top line growth rates on the commercial side of the business.
At my little profit.
Response to that. It's interesting. You have this Journal article today about SPACs. And then you have yesterday this article from David Ignatius in the Washington Post about the quote-unquote wizard war in the Ukraine conflict and the role that Palantir is playing in that. Something that Karp and I discussed at length in that interview as well.
I'm going to prepare another order just in case this starts to take off, because I've only got the one contract. So I've got my puts in place in case something, changes. And I'm going to put another call in place just in case something changes.
These companies that they were helping to fund would buy their software. As we know, of course, as our viewers know from reporting on SPACs, many of these same SPACs had higher redemptions. They started their life as a public company without as much money as they thought for growth capital, and a number of them have gone bankrupt. But the whole thing doesn't seem right because they were helping to fund their own organic revenue growth through these investments. And obviously, it's come back to hurt them because, in fact, the equity
let me go ahead on and prep this other call just in case.
Zero, because these companies are bankrupt. Not to mention they can't follow through on the commitments they've made to buy Palantir software.
Nope.
Yeah, it's. I mean, we should note it's not. This is actually more. I don't want to say common, but it's happened more than you think. And I think different companies use different strategies when they have done things like this. Case in point, Virgin Orbit, which is another name that was a SPAC that went public late last year that has made a series of investments and partnerships as well in satellite makers, for example, that will use its own launch services. So you do see some of these types of relationships. Whether it's right or not, it's certainly legal.
It's legal. I assume it's been fully disclosed, but I have to say I was somewhat surprised to learn of that, particularly because it did, even though the dollar number was not perhaps that large, it was a significant portion of their actual revenue growth.
Yeah. All right. We could keep going with this. We're not going to. We're going to get to Dom Chu with the sector sort. Hi, Dom.
All right. So Morgan, David, stocks are at session highs right now after a quiet start for the day. We do want to take a look at some of the Technology sector's bright spots today. It's a middle of the pack performer right now. First Solar shares higher after analysts at Goldman Sachs reiterated a buy rating on that stock and hiked its target price to $179 a share to $231 a share. That's giving a boost to peers like SolarEdge and Enphase as well. First Solar, of course, only joined the S&P yesterday, but it's up over 140% in just the last 6 months. So certainly one of those names we'll keep an eye on in technology. Now even more inclusive of solar. There's more ahead. Stay with us right here on Squawk on the Street. We'll be back after this.
270. I'm just trying to see where I have to stay and where I'm comfortable. Hey, Lucille. I hope you feel better. I hope you get over your jet lag. That's no fun. Okay, y'all, just so y'all know, I bought the one call and I'm watching to make sure, that she just consolidates right there. I don't want to lose any money. So she's down $10 and I don't like it because, I don't like calls anyway. I'm out. I'm going to see what she does. But nope. No. I really wish I understood this time and sales more.
After the bell, we have
270 looks like a strong support. Hallelujah. Thank God I got in near it.
Both names that are going to give us a glimpse, David, into the holiday shopping period and the strength of the consumer.
Oh, sorry, y'all. She dipping down underneath 269. No, sir. That's my cue to get on my bicycle and get out.
Really
53.
widespread jitters for investors and the markets. So the expectations
watching
are
it,
pretty
y'all.
low going into this, but we'll have to see what commentary is and whether these are two names that can meet those expectations.
Yeah, commentary on the calls is going to be key. All right, that's going to do it for us right here on Squawk on the Street. Tech Check starts now.
Thanks for being with me, Frank. Thank you, John. Brian Sullivan. Left me hanging.
It won't break 270. That's good. I don't even know what that is.
That was cool. Good Tuesday morning and welcome to Tech Check. I am John Fort with Frank Holland. Back with me on the desk. Despite that, Carl and Deidre are off again. Today, one of the stories for 2022 for growth stocks, floors and ceilings, interest rates, yields, central banks providing a ceiling that the bulls can't seem
I'm just
to cross.
looking, just looking. That's all I'm doing, y'all. I'm just looking.
Active, providing a floor. And today, more news perhaps on the ceiling after the Bank of Japan surprised many with a shock policy shift on yields, widening their target range, adding to a growing list of hawkish behavior from central banks that could mean even more pain ahead for growth stocks. Let's get to senior markets commentator Mike Santoli with more. But Mike, that's not what's happening to growth stocks today.
Exactly. And look, I think that has been the general macro overlay, John, that it's caused a rethink of valuations. Yields clearly have been part of the story for growth stock underperformance this year. But also, if you look back at prior cycles, it's not really the full driver. And to me, the absolute level of valuations at a time when the big growth stocks are not showing superior expected earnings growth next year is the story. So this is the forward price earnings multiple of the NASDAQ 100 relative to the equal weighted S&P 500. So basically the typical stock blended in.
Wow, these charts really tell you everything you need to know.
Late 2020 into 2021. That's because we thought these big platforms were perpetual earnings growth machines and they were going to have superior returns for many years to come. Yes, a part of that was we had low interest rates and you can discount those long-term earnings back at a higher level. But that's, to me, a secondary piece of it. I don't think you have to go that far to figure out why you've had the underperformance. And this valuation gap is part of it, okay? Apple and Microsoft. For the current fiscal year, we're talking 1 to 3% earnings growth. The S&P 500 next year, it might be wrong, but right now analysts see 5.5% earnings growth. You've seen 2023 earnings forecasts for the likes of NVIDIA, for Meta, for Amazon, down 40 to 50% from where they were several months ago. Even things like Netflix, Alphabet, down 20%. So to me, it's a little more of a realization that the growth stocks don't have as much growth. At the same time, you have yields going up and causing a rethink on the valuation for what you pay for each dollar of those earnings.
So in a way,
I still have this one call, y'all, and my one call is down $22, down $20. I'm watching it. It's going up, but let's see. Well, y'all watching QQQ goes up.
That's kind of what it is. I mean, look, you can even look at the shorter term, right? The 10-year Treasury yield was at 4.2 in late October 24th. It went down to like 3.4. We're up to 3.6. So we're lower on yields, and the NASDAQ's lower since that point. So you can't really draw the real time, this is the whole story type thing. And I'll just go back to prior periods when you had the one group that had such mega leadership for many years that ends up,
Lucille, if you were still with us, I'm just watching QQQ. I'll pull it back up, but I need to be able to get in and out of this quickly because I may want to dump this call.
I don't know
what to make of that, but I do know we're in the
last days of the year for people to get stuff shipped. And there's a big question, is the consumer tapped out? Maybe we're going to find out something tonight.
Yeah, speaking of big name companies, just named two facing pressure abroad and even here in the U.S. FedEx reports results this afternoon. A few key things to watch, the details on its $2.2 to $2.7 billion cost reduction plan. The FedEx announced after CEO Ross Rumanian said a looming global recession was weighing on volume. Still waiting to kind of see what he was talking about there. $700 million of those savings from cutting flights and staff hours expected in this quarter. Also, we're expecting more on how e-commerce demand is holding up into the holiday season. That's seen some huge discounts across the retail landscape. Important to note, the quarter reporting today ended just a few days after what some believe was a deceivingly strong Black Friday, Amazon included. And given FedEx often trades on margin results, that could be a volatile for this afternoon, with analysts estimating the company could report its lowest operating margin since 2001 if you do not include COVID, John.
Ouch. So what sent chills down my spine yesterday was the Costco CEO saying on Squawk on the Street, not such an exciting Christmas, particularly when it comes to apparel, when it comes to furniture, when it comes to stuff that isn't food. Right. People are pulling back. With FedEx reporting tonight, how much of that is going to be reflected? And then with the COVID lockdown we've seen, we're about 33 days away from Lunar New Year.
Yes.
Right? Does that play both ways, both on supply and demand?
Well, first, let's start off with e-commerce. According to ShipMatrix, a really trusted data source, FedEx is going to see 4 to maybe even 7% lower volume when it comes to holiday e-commerce for this holiday season, from Black Friday to Christmas. I mean, obviously that's going to weigh on revenues. That's also going to hit another source of revenue, which are retail surcharges. The past few years, they've been able to charge their big retail customers, Walmart included, more money to ship boxes during the holiday season if it's over their volume from earlier in the year. They basically
So it looks like welcome to
generally base it on
consolidation.
February. So
And
it
we're
doesn't look
holding at
that FedEx is gonna
270,
see those
holding right
surcharges
here
this
at
year.
this
UPS definitely limited
support,
surcharges. And then going
which
forward,
is
you mentioned Lunar New
cool
Year.
because
That's gonna
all
be
I
a
need
huge
to
story.
do is make
The
sure
news out of China
it doesn't
today
break
showed COVID may be worse than we ever
down.
suspected. The
So I
reopening may
need
take
to
longer
figure
than
out
anybody
how
ever
to go
thought.
in and put
So
that
what does that mean for
stop
Lunar
in
New
my
Year? Anybody's
order.
guess, but
I'm going to
FedEx
try to
definitely
amend
levered
my
China
order,
and China air freight and China
just
freight.
like y'all showed me, just like you told me, C-Bar. So I'm going to remove this because I'm about to go into this order and amend it and put in a stop.
Amazon
I'm gonna
shares
try.
have given up now all of their pandemic
Oh, Lord.
gains
I'm gonna
after
try.
a near
I'm gonna try.
50% slump in 2022. Given a murky outlook, as we were just talking about, when it comes to the consumer this holiday season, what should investors do with e-commerce names heading into the new year? Here to discuss.
So y'all know what I'm working on. I'm going back in and I'm going to look at this one call and I'm going to see if I can add a stop so that it automatically stops me out.
Does that mean it's time to buy?
Let's see.
Well, look, the last time Amazon had a decline like this, it dropped 80% in 2000, and the people that bought did pretty well, I would say, off of that trough. Now, the question is it done dropping? It's down about 50% on the year. And of course, that's coming off of like very intense overvaluation that happened during COVID. So it's not exactly the same picture as it was back then, but it seems like it's much cheaper and maybe a good buy.
So Alex, first off, first time I ever seen you in a tie. You're throwing me off. I'm in a tie. John's always making fun of me. Number
Just
two,
bringing the holiday season in.
You're dressing it up. I like that. Evercore ISI out with a note yesterday that the majority of Amazon's retail business is consumer discretionary, maybe even as much as 80% of it. Obviously, the consumer is softer than it has been in years past. How do you think that weighs on these results? People aren't buying their groceries necessarily from Amazon. They're buying other things they want.
Well, I think you look at the amount of money that's going to go through Amazon, and it sort of lets you put some cold water on this idea of like a massive slowdown. Now, before the pandemic in Q4 2019.
Well, don't worry, Lucille. That's two of us. We both have limited knowledge. I'm gonna pull this screen back up for you all, just so you can see. But hopefully, can you pull it up too, just so you can see what I'm looking at? And I'm trying to make sure that it doesn't go down. I'm trying to see if it's going to really hold at this 270. There's a support here, and it's been playing around it, so it looks like it's trying to break below it, and then it'll go back above it. So I'm trying to see if any more 270s are in here, because if it goes any lower, I'm coming out. And I think there's some 270s still in the hopper, so we're gonna see. But I didn't get a chance to place my stop because I'm still practicing how to place a stop. So I'm gonna take this out of the feed so I can go in and try to practice placing this stop right now.
How the holiday season ends up, and maybe cheap is too strong a word, reasonable relative to some other things.
Oh yeah, I got to go,
More reasonable
y'all.
now than it was when it was double the price. But the bear case for Amazon is completely reasonable. If you look at these companies, right, they're valued highly based off of the fact that they have high margins and they grow fast. They're obviously not growing as fast as they were during the pandemic, which is expected. But investors and Amazon itself believe that growth curve would keep going. It hasn't, right? Then you take a look at margins, which is the second half of the equation. And the company built as if that growth was going to continue. And it built like crazy, investing in things like fulfillment centers without fully understanding whether those would, be needed. And now it has a moment where it has to cut costs. So you're looking at growth that isn't as high as expected and margins that aren't as much as they would be because the company needs to cut costs now. And it can be bleak if you're thinking about whether to invest in the bull case. So it's going to be a struggle on that front. The real question here.
So I sold my calls, y'all. I had one. I sold the one call because I didn't like the way it was going, and I think I'm gonna go ahead and maybe do my puts for
It's a
today.
completely different world when you're in the high
We're
margin
gonna
money printing
see.
business than when you come and now you're in charge of the retail business, which is much more difficult,
I'm
much more
watching.
cutthroat. If you can show that he can do that, Amazon's probably going to be in good shape if he continues to struggle and hasn't been pretty to this point,
Yeah.
then investors are
I
going to
think I'm
probably
going to go ahead and do my puts, which is what, you know,
people felt like Amazon built their church for Easter.
we're going to
Familiar with
see.
that saying. They built for e-commerce just to keep growing and growing and growing. One part of the story we haven't talked about when it comes to the retail business is the rising dollar. They're actually getting a break this quarter. The dollar's down about 7% in Q4, but that also helps their cloud business. How do you see that impacting potentially their cloud business, the results and things going forward with that?
Yeah, the dollar is right now, it's coming back to earth, right? It was so strong for a long time, but it's starting to modulate. And I think the foreign exchange headwinds that companies like Amazon and its fellow big tech companies aren't going to be the doomsday scenario, the end of times like I thought it was going to be. I think it will still hurt, but it could end up being less of a problem for these companies than originally anticipated.
Bit broader out, talk about e-commerce writ a little bit larger. Shopify is up at 36 now, was down more like 25, 26 just back in October. So though Amazon is quite a bit cheaper than it was at various times this year, Shopify bouncing back. Might that be something for investors who are invested in e-commerce writ large to be a bit more cautious about?
Yeah, I think that Shopify, again, is one of those companies that ended up getting an overdue bump due to the pandemic. Of course, it has the storefronts. People went bananas with those when they were stuck at home, but it doesn't have the fulfillment capabilities like a company like Amazon does. That being said, it is getting some of the
Yes, we do. We need a meetup.
Full e-commerce world, right?
Because you see what I'm wearing in flip-flops all the time, all the
Now it's
time.
looking like 22% this year. So you're getting everybody in e-commerce.
So y'all, I'm just looking for an entry.
But the investment thesis on Shopify to me is still coming into focus, and I'm not fully there yet.
Yeah, they're going to be building out that fulfillment capability in a more capital-constrained environment. Alex Kantrowitz, Big Technology Newsletter. Thank you.
Thanks, guys.
All right, coming up here on Tech Check is Apple's next leg of growth, fintech. Much more on that story and what it means for the other competitors in that space. Tech Check, we're just getting started. Stay with us.
Okay, I just entered my puts for today, and that's my play for today. I'm just gonna ride it out. It is what it is. Whatever it is what it's gonna be. And we're gonna roll with that because I got a feeling this joint coming right back down. So we're gonna see. We'll see. I'll let y'all know as soon as I get profitable. It seemed like I got a good contract. Okay, and we're profitable just like that. Won't he do it? Okay, that works. All right. Yes. Yes, we in the game, folks, and we doing it. Okay, I'm sorry. It took me a minute to get the contracts and get everything the way I wanted it, but let me see. Let me just make sure. Yes, hallelujah. I need that. Yep. And so I think we're going on this afternoon descent. And so that's what I signed up for, this rapid decline. So let me show y'all. I would just put in these puts. And you can see she started right down. This is what I need. I need this 268. That was perfectly timed, y'all. Those two candles. Y'all hold tight while I go look at this money. I just wanted you to see. Hold tight. Let me go take a peek because I don't want no trouble. I will be in and out faster than y'all know. Who, sir? Yes, will. Yes, I will. I will get in and out. Let's see what she's going to do. She hit this support here. So let's see if she can go through it. If she can go through it, we in business. Get through it. See if you can break on through. Just so you guys know. Yep. I promise you, I'm not making my work hard today, y'all. As soon as I get to $100, and it's $100, I'm selling one of these because I don't have the patience. Well, she's going down quite a bit. Well, not so. Let's don't be so hasty. Okay, so let me show you what I'm looking at. And as long as QQQ keeps going, that was perfectly timed. You all, that was perfectly timed. I just jumped in, bought those 3 puts. And so let's see if we can get one more red candle in here. Let me get on the 3-minute, see what's happening. So I got in on the back end of this. So we'll see. We'll see what happens. I just got a feeling she's going to go all the way down to, let's hope she go to this 267. But I've seen that before too, where they make that whole little bowl of move. So come on out of there. Yes. Man, when it's good, it's good. Hold tight, folks. I'm going to take you out because I'm going in to get the money. I'm going in to cash out.
Yeah, hey, the interest rates on those savings
that was
accounts
sweet.
From those challenger banks.
Y'all, that was a sweet little move, just like that.
Apple has invested heavily in
213, just like that. Let me see if it keeps going down too. 268.
Could move past partnerships and dominate the space.
4, 5. Let me look at it. Okay, that's on the 3. Let me see what it looks like on the 5.
Stripe and Klarna. Joining us now.
Yeah.
KPW's Sanjay Sakrani. Sanjay, not even looking that far afield, just looking at.
So this is the play we're in now. So all she has to do is just keep going down and keep going down, keep going down. So that's on the 5-minute. I'm going to look at it on the 15. Yeah, that's what.
I think that's
so we're in on this little ditty.
Right. I think they use payments as an engagement vehicle for their customers, and the idea is to get people using their phones more and buying more phones in the future.
Wow,
so
it pays to wait.
Today. And
it pays to be patient.
Circumventing some of the economics down the financial.
So hopefully we get this little crossover here, and we get down to get under 268.
Going forward, now that we've gotten through the 2016 Wells Fargo and we're having our come to Jesus moment with crypto.
I'm gonna go because y'all know how I like to watch. I like to see what's coming down the pike.
I mean, I think for them, the real innovation would be creating very simple use cases and utilities.
I'm gonna go check on the money
inside the ecosystem,
and I'll be right back.
From commerce through payments, I think that definitely could be significant value creation and obviously help businesses in terms of generating revenues. Also, there's a lot of intermediaries in the
time to roll, time to go. Okay, I'm cashing out. I got 3, so I'm gonna close out 2 and take this money, and then I'll leave 1 runner.
Two companies, one's too small as far as market cap for us to mention. The other one, Green Dot Corp, a small cap company. Why not just acquire those companies and get some of the functions that we're seeing in reports? They want to do risk assessment, fraud analysis, credit checks, pretty basic stuff. It's not
all right. So I sold 2 of them.
Just handle all this through acquisition.
Let's see.
I think there's 2 sides to that. I think on the payment side, definitely they could acquire something. They built certain payment processes
for today.
As well. So
and this is still, I left 1. And let's see, 268.32.
I don't know that they want to
268.31. If we keep rolling, we still making money as long as we keep going down. So let me bring y'all back online.
And then I think Apple's
Woo.
Are not simply in the United States.
Okay, so I bought 3 puts. I didn't stay in very long. I sold 2 and I left 1 runner, and she's still going down. So it's a good day. It's a good day in the market. Finally, I'm out of my SQQ trade. Reached my 1%. See, I've got to learn how to express this in percentages. I don't know how to express it as a percent. I just know that's going to be pretty if she keep jumping, if she keep dropping like that. But I wanted to lock in some of those profits, y'all. So I sold the 2. I am quick to sell. I'm not that chick. I'm not trying to make all the money. I'm just trying to make more money than I spend. I want to make more money than my expenses. Everything over that is overflow, and I will be a good steward. But for now, I just, let's see, 268, 32.
Like, even though Apple can afford more milk than anybody, they're like, no, I don't think so. I think we're not going to buy that cow. So
I don't want to lose any money.
Where does it leave companies like?
But I do think this trend is going to continue the rest of the afternoon. I think it's going to continue to break down. So I'm going to just hold tight.
And yet their stocks are suffering.
I'm going to check this money, make sure we don't lose any money. We don't give any money back. And keep hoping that this thing keeps going down. Yes. Yes. I'm sorry, I be doing my little money dance. Okay. This is a good day. It's a good day. Somebody's going to have to help me, I hope, figure out how to express this in percentages, because I don't know how to do that. 268, 17.
Is manageable here because it's fairly short duration loans.
I'm going to go back over here to the
products are
3 minutes.
for people down market.
Okay, so everybody made money again today. Y'all money making traders.
As far as mass market lenders, I do think there's a lot of options for getting loans for the average consumer in the United States. So I don't see a whole lot of utility there. I've been covering consumer finance for over 20 years. And, we started in America dropping credit cards on people, right?
I don't know what that popping noise is.
So I think credit's a pretty mature market. So I don't really see a significant sea change occurring from that angle.
Yeah. Well, I'll be curious to see how that pans out, especially given what Intuit said in the last.
All right, we're still going down, y'all. That's a beautiful thing. That's a beautiful thing.
Can figure out a way to benefit. Sanjay Sakrani from KPW, thank you for being with us.
I'm just trying to make sure we take home some money.
All right, so come here on Tech Check. 3 firms have called Microsoft their top pick for the new year this week, and it's only Tuesday. More on why Wall Street likes the name and whether it's worth buying here. That and much more after the break. Don't go anywhere. More Tech Check coming up.
Okay, y'all, I'm just trying to decide if I'm going to hang in here or come on out, because I don't know. I hate to give money back, so let me see what this thing's going to do. Okay, I am going to, I hate to close this out. I'm not going to close it out. I'm going to let it ride. I'm going to let that one ride. I'm going to let it hang out. I'm going to give it a shot and see if it just keeps going down. Ms. Weiss, maybe you can help me and explain to me how you figure out the percentage, because I don't know. I don't know if I'm talking about percentage that I invested, percentage over the investment that I made. How does that go? 2, 6, 8, 3, 4. My motto, take profit. I know, but Frank, it's going to go down. She has no choice. I mean, my chart says we are set to, go down some more. So let me look again, because I found that when I go back and I look at it on the hourly, hourly says we're about to get some downtime. Let me look at it, on the half hour. Half hour says hang in there. It's going to be some more downtime coming. Let's see what the 15 minutes says. 15 minutes says we just getting started. It's about to go down some more. So I'm going to wait. That's the beauty of looking across these things. So let me see. Even though yeah, man, I'm going to hang in there. I think she's going down some more. Matter of fact, I think she's going all the way back down to 266. That's what I think. I think she's going right back down. I think she's going to make a big old upside down inverted U. This is what I think. So I'm going to hang in there and wait and see. I'm going to hang there. Frank, I took some of the profits and we're still profitable. So as long as it stays under 268.50, really.
Welcome back to Tech Check, everybody. I'm Contessa
You know,
Brewer.
that
Here's
can
your
change
CNBC
so
News
quickly.
update this hour. More signs of weakness in the construction sector. Building permits sank more than 11% last month, more than triple what economists had forecast. Housing starts fell less than expected, but still dropped to a 2.5-year low. General Mills is down more than 3% despite posting strong quarterly results and raising guidance. Sales at its high-margin pet business were flat.
It's underneath all of the
production of dog food and
SMAs.
animal
That's
treats.
nice.
3M
It's
says
under
it will
this
stop producing
support.
so-called
I
forever
don't
chemicals
think
within
she's
3
going
years.
nowhere. We're
PFAS
going to see.
compounds are widely used,
We're
but
going
they've
to see.
also
If she
been linked
break
to
through all of
cancer
that
and low
stuff,
birth
we already
weight.
know the play. I'll
3M
be
says
out of
this
there,
move
lickety
could
split.
pay tax
I'll be out of there,
charges
lickety
of as much
split.
as $2.3 billion. And Kroger is the latest big retailer to limit the
26847.
sale of
I see a
children's
lot
pain
of
and cold
30,
medications. It joined CVS and Walgreens Boots Alliance in limiting purchases. Flu
17.
hospitalizations have soared across the country. And, you know, John,
I don't
nothing
see
is
it getting
likely to
above
spark parents
47.
rushing to the children's section of their local drugstores like the thought that you're going to have a sick kid and no way to make them feel better.
Now you want to go get it, even if your kid's not
That's
sick,
right.
especially given RSV.
Managing one is so much easier. Yes, yes, yes. Managing one it's so much easier. It's so much easier to take the profit too, Frank. Yep. I still like my strategy. See, look at that big drop. I still like my strategy for going in with multiple contracts, 2 or 3, so that you can leave a runner like now. Oh my gosh. Thank God for the runner. I would be salty. Oh my goodness. So I'm going to take y'all off so I can look and see what the money is.
As you and I know,
Hold tight. Let me go
be careful
see.
when everybody loves you.
You already know I'm
What's
happy.
potentially wrong? We got to do investors,
Yeah.
viewers this service. What's potentially wrong with Microsoft? Got to be
Yeah.
something.
Well, I mean, a potential slowdown in their cloud business, of course, is one threat. That's really a growth story. The revenues are going to be there. The question is, the growth
268. We want to be
investments
under
looking for going to be there.
268,
And then if there is a
266,
slowdown, we've heard Palo Alto Networks
268.04.
saying
We want to see
deals
some
closed. We've heard Salesforce saying
267s.
there's a shift in the business. What does that shift mean for this particular hyperscale? Does that mean people are shifting maybe to GCP?
Yeah, I'm pretty sure it's just going to probably sink a little bit more. It's going to be one of them slow grinds down to the bottom. And I'm so happy I'm in there to grab a little bit of them pennies.
Right now, people starting to say, oh, Microsoft likes to be able to say, oh, you get into Office 365, get this as well. That worked during better times.
268.06, 268.04. And I'll show you what makes me say hold tight. The charts are, I think, say stay. Because look at this dramatic, you know, this is certainly pointing down. It's trading beneath the 9, the 13, the 50, all of them. And this looks like the trend might be changing, but still it may go up a little, but it doesn't seem to be able to get above this resistance. So I'm watching that. I think that resistance works in my favor too. So we'll see. I'm still profitable. And
has a big suite of products.
We banked some already, so we'll see. As long as it doesn't start shooting up above this support, then I'll ride it out and see with just the one. Yep, Frank, but you said it. I think that's managing your position size, because if you are anxious, that's no bueno. It's no fun. It's not.
Where's my data? How do I organize my data? Can you help me do that?
268.27.
Yep, Microsoft will try.
Yeah.
Sure. All right,
I feel pretty reasonable under 2.
Software space at Woodbush. We're talking CrowdStrike, Datadog,
268.60. As long as we don't start going up in that range, 275, then I would be thinking about cashing out.
Taz, thank you very much for being here. We appreciate
This last one.
Sure, thanks for
But I
having
think
me.
this is
All
some
right, I wanna
more
start with
that,
some of the names you
you
mentioned.
know, now
All of
she's
them
going
in
to bump
the cybersecurity
underneath
or
these. She
cyber
had to get
monitoring
underneath
space.
them.
We're talking
She
CrowdStrike
was, in the morning, she was above them. Can you all see that?
A
She was
very
hopping
bullish
above it. She was
outperform
going
vol
up. And
event.
now
Does that mean
she is
demand is going up
transitioned
for
underneath them. I
cybersecurity
think
in
she's going to do some
2023? We're
underneath.
expecting to see a lot of cyber threats or cyber questions
Thank
after
you,
the
C-Bar.
Russia-Ukraine war started that we haven't seen.
Oh, yeah.
Or at
Ms.
least haven't
Weiss, you're
come
talking about thank me. Shoot, thanks, C-Bar.
Sure, if I want to
She
say
is the
something,
one
thanks.
in
What is
here
something
killing the
happens in that,
game.
and then also
Everybody brings something to the table. So, no, thank you guys for coming. Thank y'all for sharing. Are you kidding me? I was trading in my kitchen. Frank was the only one in Tara was only people that was interested. Okay, well, Ty was interested too, but I mean, to have some people I can bounce ideas off is priceless, priceless, priceless. So if you are in the chat, if you're new, please subscribe. Please share the channel too. See if somebody else might be another lonely trader out there. Don't want to trade in their kitchen alone. Okay, I'm finna hide this, y'all, so I can go check on the money because, you know, I don't know. We don't want to lose no money. We're taking profits. And I have come to the conclusion, Frank, you're absolutely right. Profits are profits. Take them home. We're not leaving no money on the table.
Not just demand driven, but one of the two other macro factors we have to talk about when we talk about all these cloud names is the dollar and also rates. We've seen rates jump up a little bit this week. However, the dollar's fallen pretty strongly this quarter. How does that play a factor in your call?
I don't know. I'm gonna let her cook.
Valuations across the board, and we try to factor in how much of the interest rates are being priced into the stocks right now. So if you look at the
I'm gonna look on the hour. Like, where are we going?
And the last time rates were this high was back in 07 and 08. And we look at what the valuations were on a growth adjusted basis back in 07 and 08 and compare that to where the prices are today, the valuations are today. We think most of the stocks are pricing in a 4% rate today. So I think a lot of the stocks in our coverage are pricing in a 4% interest rate. The risk to these stocks comes from the numbers. I think there are some names that still have high expectations and numbers need to come down. So that's where we
I'm
think
just
that
looking again across the time frames.
Now let's talk technology and moats and advantages for a moment. When I look at and talk to the likes of CrowdStrike and Zscaler, they talk about the power in having a platform that's extensible, where they can let customers try before they buy, retain them, and then upgrade them into new services as needed. But then you've also got some younger firms out there, not yet public, like Arctic Wolf, that will argue it's gotten too complicated managing your own cybersecurity. So they've got a concierge service where their employees will tailor make the cyber solution for you. Of those things, what do you think is the more important play heading into 23 and beyond that's going to spark the greatest growth?
Sure. So I think it's a bit of both because there are companies that already have a lot of IT investments and IT staff. So large enterprise companies can manage their IT and their cybersecurity themselves. So those companies will continue to buy the best of breed software. But there are smaller companies that can't afford to have their own IT departments, can't afford to invest in their own cybersecurity staff. They'll move towards the MSP or the managed offerings where you don't have the in-house expertise to do that yourself, and you keep buying. You buy these products from a managed provider who can manage your IT and your cybersecurity for you. So I think it's a bit of both. Large enterprise companies will tend to buy more best of breed, while smaller companies that don't have their own IT expertise will gravitate towards a managed service kind of offering. So I think there's room for both.
So Taz, I want to bring you back to the demand question. Obviously, a lot of questions about demand. A few weeks ago, John, you had Dave Ittycheria from MongoDB on here. Generally a strong report, but it had two different metrics that a lot of people look at: billings and deferred revenue. There's also AAR out there. So what are the metrics you're looking at that signal to you, hey, they have a pipeline of demand, their customers are happy, and their customers are continuing to pay?
So we'll look at, it depends on the model. There are models that are seat-based. For those models, we'll look at revenues and billings and RPO and bookings. And they're more consumption-based. You mentioned MongoDB. So MongoDB has a business that is consumption-driven. So companies can optimize their consumption on a quarterly basis or a monthly basis, and that will impact their revenues. But for those companies, you have to look at billings and bookings and RPO, which will give you a sense of how much people are committing to forward spend. So revenues are important, but we look at bookings and billings and RPO for to get a sense of the forward commitment and what people are buying today to spend in the future.
So Taz, we got to let you go, but just really quick, are you buying the story that we're hearing from so many CEOs and executives that the deals are just taking longer to close? That's why some of these numbers are soft or all.
We've heard that from our checks also. We've heard that from our anecdotes with, checking with CIOs and CISOs and channel partners that deals are there in the pipeline. It's taking longer to close these deals. These deals need more approvals now than they were taking in the past. So there's a little bit of a lull in that approval cycle. So I think that's true. Demand hasn't gone away completely, but there's obviously a digestion phase happening after 2 years of strong spend. There's a little bit of belt tightening happening, given what we're all hearing about the macro and about the recession next year. So deals haven't gone away, but fair to say that there's a little bit of slowdown in the approval process.
All right, we have to leave it there. Taz Kujalji of Wedbush, we appreciate the insight. Thank you.
Thanks for having me.
And now signs Elon Musk might finally be throwing in the towel on leading Twitter. Sources telling CNBC this morning the new Twitter owner is officially searching for a new CEO, despite initially tweeting on Sunday, quote, "There is no successor." Of course, that person will have to report to Elon Musk. We'll continue to watch that story.
He said there is no successor. Ego. Checking money.
All right, welcome back to Tech Check. Time now for a gut check on EVs. Let's start with Rivian. Cantor Fitzgerald initiating coverage this morning with an overweight rating, price target of $30. Bullish on the company's truck and SUV lineup and their vehicle partnership with Amazon. And then there's Lucid, announcing they've closed a $1.5 billion raise, the majority of that cash coming from an affiliate of their largest investor, the Saudi Public Investment Fund. Take a look at the stock right now, up almost 3% on that news. Tech Check, back right after this.
This thing is definitely testing. It is definitely testing this resistance here. Testing and retesting. Eventually it breaks. Yeah. And so hold tight, because I may be ready to come out of this trade. Let's see, 268.44. What's coming down the pike? 50, 39, 36. I see some 20s. So let's see if it goes back down. I'm just watching, folks. Just watching to see if I want to stay in for this afternoon activity or if I want to exit and re-enter, which I might do while we still got some decent profits. 35.
Now. Welcome back. Meta officially pushing back the closing date for its planned purchase of VR app developer Within Unlimited as the company continues to face off with the FTC over antitrust concerns. We're just an hour from the conclusion of the evidentiary hearing in San Jose. Our Steve Kovac joins us with more. And I guess at the root of this whole issue to me, can you have monopoly power, Steve, in a market that doesn't yet exist?
That's the whole question here. It's the FTC's case is maybe one day that we're all going to be wearing computers on our faces and doing fitness exercises in the metaverse. That's clearly not the case today, but that's the case the FTC is trying to make right now against Meta's acquisition of this company. They make a relatively popular app. It's called Supernatural, and I guess they've seen some good use cases with it. But it also speaks to Meta's overall vision towards the metaverse. They're putting this out there, and they have no idea what to do with it. They're waiting and looking at the data to see how people use it to inform acquisitions and content like this. But yesterday, Andrew Bosworth, the CTO of Meta, was in court testifying in this case, basically saying, we're bad at making content, so we need to acquire the content in order to be able to compete in this metaverse thing.
If you're spending more than $10 billion on something, can you afford to testify in court that you're bad at it? I mean, first of all, I'm sorry, Frank, you go ahead.
No, go ahead. Go ahead.
I mean, I just know when I get ahead of steam about these metaverse rants, but this is perhaps part of the question. Is the FTC serious about its legal case here, or is it playing chicken with these companies? We've seen some evidence that Lena Khan is thinking, boy, when we put up a fight, some of these companies just back off
the chilling
what
effect.
They plan to what they plan to do, and so we count that as a win. Doesn't seem like Zuckerberg is backing off, whether it's on spending billions on these things or fighting the FTC and other regulators and his right to do it.
And this one kind of seems like a slam dunk for them, right? Because we said this market doesn't even exist. It's hard to even say it exists because it's so tiny and the use cases are so narrow. How many players are there, John? There's Meta. They have 2 headsets. Apple, maybe next year. And then there's Sony, which is mostly focused on gaming. Just plug it right into the PlayStation. So the market barely exists. Maybe one day it does exist. Maybe 15, 20 years from now. But right now it doesn't. So that's the argument they have to make.
Well, Frank, you got one of these at home.
I do have one at home, and I never use it.
I do too,
We were just talking about it. I mean, you get on there one time, it's like, oh man, I'm at a concert, and then you put it down because you can't really play games with other people that well. The experience is fun, but it's not immersive. It's just, you kind of see what you're seeing. So I think my real question to you is, what is Mark Zuckerberg going to say today that's going to make sense to the FTC and also to all of his investors to say, hey, you're losing tens of billions of dollars?
Right, exactly. And he has to really make the case. Again, he has to straddle both things, right? He has to sell his vision for the metaverse and saying this is going to be a thing. This is why we need the company. And at the same time, he has to kind of make it sound like they're not very good at it. And we need to acquire this company in order to compete before, Apple swoops in or Sony swoops in. And they did mention some of those companies yesterday saying, hey, there might not be a lot of competition now, but it's coming.
All right. So And Apple, meanwhile, is making fun of the metaverse. So who knows if what they're doing is going to be directly competitive or not. They might be bluffing.
And that was another thing that Bosworth brought up yesterday. He said, we had to buy this company because we were hearing rumblings that Apple might buy it and make it exclusive to whatever Apple was working on in this headset space too. So he's making that, again, competition here. So they really believe it's going to be Apple versus Meta in this.
Speaking of, I guess Mark Zuckerberg arriving right now. Here's the video at that hearing. You know, he can't get Sheryl Sandberg to come to these things anymore.
No.
He's got to go himself.
Yes.
Cheryl, you know,
she's relaxing right now.
She got out at the right time. That was one of those tops, perhaps, in social stocks that you could count on. Between changing the name to Meta and Cheryl saying, "I've had enough," that would have been a good time. You know, I remember that very walkway in San Jose. Some of the Apple, Samsung.
Yeah.
Right.
Theranos, I think, was there too, right?
Yeah. A lot of action has happened there. We'll see what kind of argument Mark Zuckerberg makes. Long time from the hoodie days. He is in. I mean, he's wearing a tie. This is not good for me, Frank. If Zuckerberg was wearing a tie, a turtleneck would have been better. But no, this is an important moment when it comes to regulations. We were just talking about, Steve, because the question is, can you do a sort of back to the future regulatory approach where because this might be big in the future, we're going to regulate it now? Regulators did get a lot of heat for allowing Facebook to buy Instagram
and WhatsApp
for $1 billion. Well, I mean, WhatsApp still isn't much of a business, but Instagram could have been huge. And the argument was, well, if we had done more of a look into the future at what this could have been, we shouldn't have allowed Facebook to buy.
Yeah, and they're having buyer's remorse, or not buyer's remorse, allowing the buyers.
Regulators
remorse. And that's been Lena Khan's kind of thesis ever since she got this job. And that's, by the way, that's why Biden appointed people like her to these positions, because maybe they're losing these cases. When the FTC sued Microsoft a couple weeks ago, we're talking about the Biden administration's track record at killing these deals, not very good, with the exception of the Simon & Schuster deal. So is it just to put a chilling effect on it, or is she really trying to make a point? I mean, the bigger case, this is such a small deal. The bigger case is going to be Activision and Microsoft in that lawsuit.
But is this the type of market where you need to be killing potential transactions where somebody with billions upon billions of dollars wants to spend on some entrepreneur's idea? VCs aren't spending on it.
And then the question becomes, how do you prove that?
Yeah.
How do you prove that one day this is going to be a dominant way we use computers?
Yeah. Well, in this market, maybe you don't want to give Silicon Valley a cold shower in quite that way.
Right.
Steve, thanks.
Thanks.
Meanwhile, looking for the best chip stock to own in the new year? Well, Cowen says bet on Applied Materials, the equipment maker, while Needham likes NVIDIA, the chip maker. Find out why with both those analysts next. Stay with us. We're back in 2.
I'm selling my last contract. I want out. I'll take my profits and run home. Thank you. I sure will. I'll take those and then I'll wait. I'll see if maybe there's another trade later in the day. But that was cool. I caught that down. I just don't want to give it all back. So we'll watch and see what happens for the rest of the day. Okay, there you have it. There she is. There you have it. We got Trader TV going. Okay, I'm just going to be watching too.
appreciation.
Who was the second name that you mentioned, Bill? It was Annalie and it was HENC. I couldn't catch the ticker.
Yeah, it's AGNC.
AGNC. Got it.
It goes by the initials.
Perfect. Now it makes sense. Full sense to me, Bill. Listen, you're retired. You are truly unconstrained now. You can do what you want. You've been talking about shorting AMC years ago. What else are you doing in the equity markets? And what's your take on this FTX nonsense?
Yeah. Well, the meme stocks, GameStop and AMC are basically played out, I think, although the companies themselves are not looking forward to any good prospects in the years going forward. But, my interest, aside from the mortgage REITs, has been in the natural gas MLPs, master limited partnerships, and these are tax-deferred, consult your tax attorney, tax-deferred investments that yield 9, 10, 11% natural gas pipes, and they are somewhat correlated to oil prices have gone down, and these have held up. And so, it's a great deferred tax play at 10%, and so I like those as well. Do you do
ETFs or individual names, Bill?
Yeah, no, there are some ETFs that investors should look at. AMLP is the symbol of the largest one, but I'm investing in Energy Transfer, biggest one, ET, and that yields now above 9%. And like I say, it's not going to show up on your 2023 tax return because it's a deferred benefit.
And Kelsey Warren, who runs ET, has bought over $100 million of his own stock this year. Bill Gross, Bill, we know you're busy. We appreciate your time, my friend. Have a happy holidays to you and Amy. Happy New Year. And thanks for calling in, Bill.
Thank you, Brian.
All right, take care. All right, here we go. Annalie Capital, AGNC, Alarian, Energy Transfer, the retired Bill. We like the retired Bill. All right, up next, we'll debate some of the top stock picks for next year. Part of your calls of the day, plus the trade ahead on Nike, their earnings out after the bell. We are back in 2 minutes.
TV.
All right, time now for the calls of the day. Something about a train that's magic, they say. So let's start with Union Pacific, upgraded to outperform at Evercore. Firm says risk is already priced into the stock. Jim, you own it, so you obviously agree. What do you like about UNP?
Well, Brian, besides the fact that it's Christmas and the time that little boys get model trains, this is a real train with really good prospects looking forward. And it really comes down to what this economy is going to do over the next few years. Frankly, it's just going to build things in this economy. And you need things that get transported by trains, aggregates, steel, cement, iron ore. These are the things that get transported by Union Pacific. It's been knocked down a lot this year, but I see good prospects for it ahead.
All right, Disney and Netflix both named top picks in their groups at Wells Fargo. Josh, your take.
I think Disney's getting close to the area where I talked about possibly buying it. Netflix I own it lower. I'm sticking with it for a little while. I talked about the ad platform in the last block. I'll just mention they got a downgrade from an analyst who basically looked at the first 6 weeks of activity with the ad platform and said, not happening fast enough. We're cutting this to a neutral or whatever. That's almost childish from my perspective. Netflix executives have gone out of their way to talk about how slowly they were going to start the ad platform, and they didn't give any kind of guidance or really do anything to tell you that they expected the best quarter ever to be the first 6 weeks that they launched. So I like the weakness in that stock. If I didn't own it, I'd be buying it right now because this is not the type of investment that they've made to build this ad-supported platform to hope that the first 6 weeks are like a grand opening. That is really not the story here.
All right, Caterpillar and Deere both named top picks in their groups at Jefferies. Caterpillar and Deere, similar, Steph, but different as well. Your take.
Yeah, I own both. Deere is my largest industrial position, but CAT is a close second. And I think that it's the energy business in CAT that's not getting the respect. It's about 35% of total revenue. I see it going to 45% by 2025. They've got strong pricing power and very tight inventory. So I like that story. On Deere, this is all about precision farm technology and how they're implementing that into the company. And that gives them better visibility and better margin visibility to the end of the decade. And so I kind of like them both, and I'm going to stick with them. And on any weakness, I want to add to both of them.
Okay. Uber named a top pick at JP Morgan. Josh, hotly debated name. You own it. Give us the take on Uber.
There's really no debate right now, Brian. It's a dog with fleas. It's been terrible all year. It's sitting right on an all-time low. I don't really understand it. I don't know why the stock price is where it is. I think it should be high 30s, low 40s minimum. I know a lot of Wall Street's targets are in the 40s. I think it just gets lumped in with this this group of stocks that were considered like stay-at-home stocks because of the delivery business or unprofitable tech. Like it's in all of those garbage indexes, but it really doesn't belong there. This is a company that has gotten to profitability, will become more profitable as the quarters pass on. I actually think Dara should step up and buy some stock. I don't know what this guy's doing, but he's running a great business. The street is disrespecting him. I think he should step up and do something about it, quite frankly. At a market cap sub 50 billion, with massive revenue, with growth, with a huge international business, why is he sitting here every day and just ignoring the carnage that his shareholders are living through?
Yeah, I mean, yeah, you're right. Pull a Noto, right? Anthony Noto. You're buying up SoFi, so as much as you can.
By the way, I don't even know if it would help. I don't know how much he could buy. I'm not going to pocket watch somebody, but how could you? Well, how could you watch this go on? Your business is actually growing. How many publicly traded companies this year can boast about revenue growth or getting further into free cash flow growth? Like that's not the case for most of these falling tech stocks. This, I think, is a very unique situation where they just are not earning any respect at all.
Yeah.
And I don't know what turns it around, but I'm surprised how long it's gone on for.
Well, that's your point, right? Like, just even if it's a couple $100,000, which is nothing for the CEO, just buy the stock, show the employees, the investors that you're in it to win it as well, and you have confidence. Good point, Josh. All right, coming up. Nike.
Or let it go to 18. your choice, Dara.
Yeah,
Ball's in your court.
24-8 right now. All right, coming up. Nike down 40% from recent highs. China's a big drag on that company, but the stock just got a price target upgrade ahead of earnings after the bell. We've got ownership on the committee. We'll talk to Nike trade next on Halftime.
Within Unlimited, we will continue to monitor the hearing. We'll bring you any developments as they happen. In other news, President Joe Biden will travel to Mexico City in January for a two-day summit with other North American leaders. Biden is expected to meet one-on-one with Mexico's President Andrés Manuel López Obrador, and then a joint meeting with Canadian Prime Minister Justin Trudeau. This will be Biden's first visit to Mexico as president. But of course, Vice President Kamala Harris visited there last year. The Bank of England is unveiling its first notes featuring King Charles III. Those notes will enter circulation starting the middle of 2024, and gradually they'll replace the notes featuring his late mother, Queen Elizabeth II. But apparently, Brian, collectors are clamoring for rare and sought after notes and coins featuring Queen Elizabeth. There's one from pre-World War II of her as a child. So that's pretty interesting.
Collectors are clamoring. Some nice.
It's alliteration from Contessa.
At its finest. But I would expect nothing less, Brewer. Thank you.
Thank you.
All right, Nike earnings. They're out after the bell today. JP Morgan raising its price target to 127. All right. Amy, Steph, you both own it. Amy, I'll start with you. What are you looking for tonight besides, like good earnings?
Love good earnings. We don't own it for the quarter. So, tonight they'll report whatever it will be. I doubt it will be that great. I mean, China's still going to really be a drag on earnings. That we'll see how their inventory looks as well, which will be super important. But we trimmed Nike earlier this year, obviously not enough given the year that it's had. I do think longer term, it has a lot of opportunity in front of it as it eliminates the middleman and goes direct to consumer. That will be a big boost for earnings. This is obviously a best-in-class retailer. They can manage their inventory, I think, better than most. So I do think they have some competitive advantages, but we're obviously not playing it for the quarter. And if it gets hit, I've been looking at it all year after we trimmed it, and it keeps going down. At some point, we'd add to it for the longer term story, but near term, there are definitely headwinds.
Yeah. And Steph, what kind of guidance do you need to hear?
Oh my gosh, just in line, honestly, just an inline guide. That would be kind of yeah, it's the new up, exactly right. Look, a couple things. Solid demand, we heard from Capri and we heard from Tapestry and also Skechers. So I think demand is going to be fine. Nike has SG&A kind of levers to pull on the way up and on the way down. DTC, as Amy mentioned, it's 40% of their total revenue. So to the extent they grow that helps margins long term. But the most important two figures, gross margins, they guided down 350 to 400 basis points year over year. The other thing is inventories. First quarter, they were up 44%. They've got to work those down. Those are the two key metrics, though, I think, for the stock price.
All right, well said, Amy and Steph. Thank you. Those numbers out tonight. All right, coming up. Stocks overall, we get hit hard this year. The Fed keeps raising rates, but which stocks will benefit when the Fed stops raising rates? We'll talk about it. And the investment committee is ready to grade your trade. As always, if you want to send in a trade, go to askhalftime@cbc.com on the email or tweet us using the hashtag #GradeMyTrade. We're back after this. right, welcome back to halftime. It is now time for Dom Chu and today's Sectornomics. Dom, what sector are you going to nomic?
We're going to nomic just about all of them because they're all in focus right now, Brian, given what's happening with interest rates. And the reason why is because certain sectors have been hit harder than others as rates have really drifted higher, not even drifted, gone shot up higher since the beginning of the year. If you look at the benchmark U.S. 10-year Treasury note, at the beginning of the year, we were closer to just around 1.38%. Got as high as 4.33% at the highs, and you can see where we are right now, just about 3.7%. What that's done is made a lot of investments a little less attractive, given the fact that you can get so much more return risk-free, courtesy of the U.S. government. Now, as a result of that, some of the sectors that have been hit the hardest from a valuation perspective are tied to that interest rate trade. If you look at some of the names in communication services, that sector down about 27%. Real estate, very much tied to interest rates in that market, down about 20%. Consumer discretionary, which encompasses names on the growth side like Amazon and Tesla, down 19%. And technology, of course, down 13%. Since the Fed embarked on its rate hike cycle in kind of the spring of this year. Now, as for the stocks that have been hit some of the hardest here in terms of those names, Tesla is down 47% during that span. Meta Platforms down 38%, and even Microsoft down about 14%. Valuation, part of those stories, and of course, Brian, some of the more company-specific idiosyncratic issues affecting valuations there as well. We'll have to see how those play out. But if you're looking for where some of the biggest bounces could be, hypothetically, in a world where the Fed pauses rate hikes or even hypothetically starts to cut later on, well down the line, some of these beaten up names could be ones on those shopping lists. Brian, back over to you.
All right, looking at it, Tesla, Microsoft, and Meta. Dom, thank you very much. You nomicked it well. All right, Steph, let's go to you. Home builders, DHI, I'm trying to find any super rate sensitive-y type stock sector.
Yeah, well, home builders are totally tied to higher rates. So if rates stop going up, maybe even come down, I think you are going to see the home builders actually see an improvement. Overall, I think discretionary will win. The XLY is down 37% year to date, and I think staples will lose. The XLP is only down 4%, so massive outperformance on staples over discretion. So if the Fed stops, I do think the home builders will be a winner. They've acted quite well. The 30-year, by the way, Brian, is down 21% from its highs, and this is best-in-class company, best-in-class ROE, operating margins, and at 1.3 times book or 9 times earnings, very cheap. VF Corp, by the way, I own DR Horton. The VF Corp I don't own, but I have in the past. This thing is down 65%. And trades at 12 times earnings as an 8% yield. They have a new CEO that's yet to be named. They probably come in, cut that dividend, but I don't think it's going to be by a whole heck of a lot. And they have best-in-class brands. And as I mentioned, a catalyst with a new CEO.
Yeah, and Amy, we got what's your take on the interest rate sensitive moves, assuming the Fed will eventually, they have to stop at some point. What would you like?
It's going to be your high beta, long duration names. The things that got crushed this year will do better. As I said earlier, we've been adding to some of those. I mean, the problem is that they haven't worked. As Dom said, rates are down from 4.3 to 3.6, and you would have expected tech to really rally during that decline, and it really hasn't. But that's your typical play, is that you want to buy if inflation's coming down enough to the degree that the Fed can stop or even turn. You want to buy the winners in a disinflationary environment. Those are your long duration tech stocks. As the yields go down, the discounted value goes up, and so it's pretty much a mathematical relationship. So it's a truism that holds. So I do think we can experience that in the first half of the year. That would really be a shock, I think, for the markets, but certainly possible.
Okay. Amy, Steph, thank you very much. All right, up next, Mike Santoli with a midday word, halftime. I'll be right back. Stick around.
$1,000.
All right, senior markets commentator Michael Santoli joining us now from the stock exchange. Mike, what is the midday word today?
Well, today, Brian, I think it's one of those days where the relatively muted reaction by U.S. markets to what happened overnight with the Bank of Japan might be more the story than any, kind of broader impact. In other words, the potential macro jolt. We got a 4% move in dollar-yen exchange rate today, and it didn't, at least initially, cause much spillover, except perhaps to help put a floor under Treasury yields, actually global yields, really, if we're talking about it. And that's not a terrible thing considering how far down yields had come in the U.S. So an interesting spot for all that to take place. We still keep operating for the stock market, for the S&P 500, in this range. Went from 4,100 almost to the tick last Tuesday.
Thank you, Frank. When did you figure it out? I need you to help me.
So it seems like we're trying to figure out if this is a reasonable zone.
I need you to help me, Frank. You figured out how to make an options order template. Okay. We need that.
Does in fact show up.
Yeah, Josh, listen, it's Hanukkah. We got Christmas in less than a week. We got New Year's. So what are you watching?
Maybe we can get together, or you can show me over the phone or via Zoom or something, because I would like to make sure that I get that, because then I could walk away from this foolishness. I've enjoyed my study.
A lot of the headline inflation stuff that we're seeing,
yes,
I think is the wrong way to look at, year over year change.
Thank you, Frank.
We should all be laser focused on month
Thank
over month.
you.
And even if you want to do like multiple months, but like an exponential moving average, let's say, let's focus on what's happening right now, because
so Frank, we could potentially always have it at 20% profit, 10% loss.
So that's bullish.
Just set it up like that. I need you to show me, because I need that in my life.
Too far.
Because I've studied enough. I don't want to study this every day.
It's very difficult.
Yes. Okay, so cool. So I can always set my profit at 20% and always exit at 10%. I like that. Okay, definitely. I'm ready for that. Is there anybody who didn't get the I should probably put the message up. If anybody didn't get the Zoom link, please let me know. I think I emailed everyone, but if I left anybody off, I'll leave it in the chat. But you have to email me. Thanks, Frank, for that. I can't wait. I need that. I wanted to do it today. I just didn't feel comfortable, and that would probably have helped me too. But I'm trading much better with you guys. I'm more rested, relaxed, not edgy, not jumping in and out of trades. So it's been good. It's been good. But I did buy 3 more puts for the afternoon, Frank. I think I'm going to have to swing those. I got plenty of time. I think I may have to swing it. We'll see what the afternoon holds. We'll see. We'll see. We'll see. We will see. We shall see what the afternoon holds. 269. I received the email, but when I checked on the link, it tells me I need access and that I have to request access. I'm signed in with my Gmail account. Ms. Vice. Okay. You want to test it now? Can you test it with me now? I can open up the Zoom and see if you could use the link. Let me see. Because that shouldn't be.
This is a best-in-class pharmaceutical company growing 9%. That's about 56% of their total revenue.
I'm signed in with my Gmail account. Ms. Vice, if you have time, I can launch it right now. And then you just tell me if you are able to get in. Oh, look at this.
All right. Next up, Bill. He sold Cleveland Cliffs at $15.
Okay, I'm going to start it. Give me 2 minutes and I'll start the Zoom.
All right, Jim, you own both of these stocks. How would you grade Bill's trade?
I have no choice but to give Bill an A. However, Bill, I'd like to speak to you after the class is over. Selling my Cliffs doesn't go over well, but that's okay. That's okay. Why don't you let Boeing run for a little bit and then reverse the trade? But based on the prices, good job.
You know, it doesn't. Okay. Also, call him an iron ore company. The CEO, I'm told, loves that. Kidding.
Start.
All right, finally, Adolfo bought Chevron at $183.70. All right, Steph, you own Chevron. Your thoughts on Adolfo's trade?
Okay, Ms. Vice, I'm in there now. You want to try to see if you can get in?
Best-in-class blue chip oil company doing all the right things. They've got upstream and a great Permian asset class. They got downstream where they have pricing power, and chemicals also they have pricing power. Very, very strong balance sheet. They're actually buying back anywhere from $5 to $15 billion. They're kind of going at the high end at this point in time, and oil above $75. They're just printing money at this point. So I like this story very much. 9 times earnings, by the way, and a 3.3 yield.
Oh, well, we know how the government loves them printing money. It's their favorite thing. All right, keep your trades coming in. Send an email to askhalftime@cbc.com or tweet us.
Getting the same message. Okay, so that's so weird. Hey, Frank, anybody else out there? Can you try? I'm in this Zoom meeting. Can you try to access it and let me know what happens? I received the email, but when I click the link, it tells me I need access and that I have to request access. I'm signed in with my Gmail account. That's odd. Okay, let me see. I don't know. I will try something else. Let's see. Hold on, give me 1 second. Getting the same message. Yeah, the email that I used was an AOL account. Should I give you let's try with your Gmail. Email me your Gmail account, Ms. Vice, and then I'm gonna see if Frank can get in. Because I'm in here. But you know what? I sent you guys that from Zoom. I didn't send it from like Gmail. So let's see what happens when Frank tries to get in. We'll see what happens. Maybe I can't send the invite from. No, Marilyn is in. Hey, Marilyn just got in. So I think I admitted, yeah. Frank is, let's see if everybody else can get it. Maybe it's the email. Maybe that's it. Your email address. But if you guys want to try while I'm in here, and then you can let me know, that'd be helpful. Yep, I got Frank. Frank is in too. So Ms. Vice, maybe it's your email address. if you have a Gmail, send me that, and then I'll resend it to your Gmail. So just email me at fromlack2legacy@gmail.com, and then I will send it back to you, because Marilyn got in, Frank got in, and I don't think they had any problems. So, okay. Anybody else want to try before I close this out? 2, 6, 9, 8, 5. The email that I used was AOL. Okay. All right, I'm closing out this one. Thank you, guys. Thanks for helping. Thanks, Marilyn. I'm ending it.
Now.
Yeah, please check that for me. And I'll check my email while I'm sitting here.
Why don't you start it off for us today?
Let's see.
Sure, I'm going to go with Fiverr.
And then I'll send it to you while we're here.
Sort of the Uber trade of this is a profitable company. It's $1 billion market cap at this point. I think they're well positioned, especially if the labor market does turn and becomes weaker. They're well positioned to capitalize on that. So I don't know why it keeps going down, but it does. It's been a really frustrating stock this year. It's a small position for us. We just added to it a bit. But I do think if we get into this disinflationary environment and yield come
Hold
down
on
a
one
bit,
second. I'm checking my email for your email.
Josh Brown, final trade.
I've been stalking this DocuSign for a bit. I think if you are comfortable with a small amount of risk, you could pull the trigger here. A company reported last week. They actually beat earnings. Analysts are raising estimates. There are very few stocks in this category.
Okay, let me go find my Gmail.
And I think you can use the rising 50-day moving average, which is 47.5, as your stop loss. So I think the upside maybe is a double, the downside 6 or 7 points. I like the trade here.
Jim?
Yeah, Wynn Resorts. Look, I heard Josh earlier
Okay,
that the
Lucia.
consumer may be laid out flat in the year to come. Maybe he's right, but I'm actually putting my money on a strong labor market propelling further record results in Las
Hey,
Vegas.
Steph, round it out for us.
Moving about
Okay,
today.
General Electric, aviation is humming, healthcare supply chains are getting fixed, and power profitability continues. They are splitting up into 3 on January 4th. That's a nice catalyst.
There you go. Perfect timing, everybody. We'll see you tomorrow at halftime. The exchange.
Was everybody able to access the Google Drive and get the videos? So all the resources that we have so far, I dropped in a Google Drive and I emailed that to everybody. Is there anybody who didn't get that? Let me know. And I'm looking for your new email address, Ms. Weiss.
Plus, yesterday, Carter Worth warned us away from high-flying consumer stocks. Well, they were high-flying. But today, we'll hear from one investor who says bet on the consumer in 2023. And 3 months ago, FedEx kicked off a market scare by warning
requesting access to the following folder.
Again. So what should we be braced for?
Dynamic.
That plus Nike coming up in earnings exchange. But we begin with some green arrows for once. Dominic Chu has that for us.
Green arrows right now that were red at one point today. Fairly symmetrical, Kelly, because at the lows of the session, we were down about 22 points or handles on the S&P. Up about 20 at the highs of the
Parts
session.
of the email
We're
are
tilting towards that
dynamic
higher end of the range right now. 38.29 the last trade for that broader S&P 500. The NASDAQ composite 10,571 up 25 points, 0.25% advance. So a little bit of a underperformer today. And the Dow Industrial's up about 150 points, 0.5%, 32,906. So fractional gains. And at this point, the bulls will take it. We've seen a nice downdraft since the Fed announcement this past week. Now, one place
y'all let me know too if you can't access the Google Drive. I need to know that too. So somebody, if you can, if you don't mind checking it for me, and just let me know. Okay, let's see. I can try now. Okay, just sent it. Thank you. I'm gathering and eating with friends and checking YouTube trading family. A little addictive. I know, Marilyn. We miss you too. Ms. Weiss, okay, I'll check for your email.
Now, since those highs, we've come down roughly 9% from those levels. So as much as we want to talk about the strong U.S. dollar story, yes, very much still in play right now, but it's, again, well off the highs that we've seen over the course of the last few months in terms of the strength of the U.S. dollar versus all those other big currencies out there. This ETF tracks them pretty closely. And if you're looking for a stock of the day, the worst performer in the S&P 500 is Tesla. Now, this has been a momentum downside mover for quite some time. There are some idiosyncratic issues with regard to valuation on the rate side. Also, maybe whether or not Elon Musk is going to continue his involvement to a substantial degree with Twitter, the other company he now owns and is the CEO of, versus the company Tesla that he is the main driver of there as well. So Tesla shares down 5.5% right now. The worst performer in the S&P, again, by the way, if you look at these levels, Kelly, the reason why I put a 3-year chart up here, it's still up 425% in that 3-year span, but you got to go all the way back to November of 2020 to find a level this low in Tesla. So whether or not 2023 becomes that year where we find some stability, maybe a bounce. That remains to be seen. But Tesla shares certainly still in that downward drifting mode. Kelly, I'll send things back over to you.
All right, Dom, thanks. As tempting as it is to talk about Tesla right now, we should get to the big market story of the day coming from overseas. The Bank of Japan jolting global markets overnight after stepping back from yield control. It will now let the yield on its 10-year bonds trade at a whopping 0.5% instead of just 0.25%. May sound like small potatoes, but it sent markets reeling. Bond yields jumped globally after the move. You can see Japan's stock market lower. Our dollar tumbling lower. That's what that's showing there. And look at our 10-year note up to almost 3.7%. So why did they surprise markets like this? And why the strong reaction? We have a delight today. CNBC contributor Michelle Caruso-Cabrera here on set with me, along with Peter Bookvar, who's also a CNBC contributor and CIO of Bleakley Financial Group. Welcome to both of you. Perfect duo to help break this down. Michelle, let's start with why did they do this?
So if you think about what's happened with interest rates for the last 10 years, think about it like a mattress. Every single central bank in the world was pressing on their respective spring, right? And then suddenly we started to see all these central banks around the world lifting up on their springs, except for the Bank of Japan. They kept pressing and pressing and pressing. And what they revealed today is that their arms are getting tired. They just can't do it anymore. They're going to start to let their interest rates rise because they have to. Because it was going to get out of control if they didn't do something.
Why was the reason that they tried to keep rates down? Just it would be too expensive, or they were? What was the purpose of this policy?
Remember, they've always been way more aggressive than everybody else because they were fighting deflation. They were trying to get prices to rise for years and years and years. So they did something way more radical than even the United States did. You know, the U.S. says we want interest rates to be lower. We're going to go out and buy $90 billion worth of treasuries. Bank of Japan said, no, we want our interest rates to be at a certain amount. So we are going to buy as many treasuries as we have to buy.
Wow.
There are days when there are no trades in the Japanese treasury market because they are the entire market. They own 50% of the Japanese government bond market. That's how radically interventionist they are.
Peter, we know it's a huge market, so itself, whatever they do has implications. But also when you hear what Michelle's describing, you go, well, you can see why people might think this is a preview of what's to come elsewhere. Why did they stick with this policy even when it seemed like everyone else was starting to back off?
Well, they almost became an arm of the government in terms of fiscal and monetary sort of meshing together, that the fiscal side still had to spend a lot of money. They have extraordinary levels of debt. And the BOJ was sort of meant to keep their financing costs so low. But the position became untenable. On Thursday, they're about to print headline inflation near 4%.
Wow, in Japan.
And ex-food and energy, 2.8%. And to continue with the straight face, keeping policy as is, just became, I think, as I said, untenable. And maybe Kuroda just wanted to do something before he leaves at the end of March.
The governor. But here's what I don't understand. If their goal was to get inflation higher and then they achieved that, so is this, did they achieve what they wanted, or was this not working? It seems like the very goal is now the problem with this policy.
Well, the problem with keeping the yield curve so suppressed is that it destroyed the Japanese banking system. The Japanese TOPIX bank stock index is down 88% in nominal terms from where it was in 1989. How can you have a healthy economy if you destroy your banking system, since so much monetary policy and lending is supposed to flow through the banks? So rather than generating faster economic growth, it actually depressed economic growth in Japan.
Yeah, and why they stuck with it, mystery, right? They finally achieved what they wanted to achieve, and yet they're so enmeshed in this policy. One of the implications of what they did for decades is that Japanese investors, because they could get no yield in their home market, tended to be big overseas buyers of other stuff. The average Japanese investor was far more likely to buy, say, a Brazilian high-yield bond than your average American investor would be. And that's why you saw yields all over the world go up, because if the Japanese at home can now start to, and they're not getting there yet, but they're starting to get more yield at home, then they will buy fewer things overseas. So you have a big buyer that is potentially leaving the market.
And what's the implication, Peter, beyond, as Michelle said, that immediate impact in some of the places the Japanese might invest? Like over the next 6 to 12 months, what's the broader message you think for global monetary policy or for U.S. investors? I mean, what are some of the takeaways?
Well, when you look at the last 10 years, where's a lot of the excess? And it really was in European bonds with negative interest rates and also in Japan. So you have this sort of bubble deflating in these bond markets that, as Michelle said, is going to have global implications. So the BOJ is going from 25 to 50. What happens if next year they go from 50 to 75? It's going to keep interest rates around the world elevated for longer. And also, to your point, the Japanese used to own $1.3 trillion of U.S. Treasuries going into this year. That pile has now been reduced by about $250 billion.
Wow.
And it's likely going to shrink. And foreign central banks have been a net seller of U.S. Treasuries this year, which will go as part of the story with the BOJ, likely continued sellers as we go into 2023.
So you have them selling, you have the Fed, not buying more, maybe selling. In other words, like a lot
banks
of these
selling less too.
Banks, so all of a sudden,
and a lot of supply coming.
Exactly, the size of the Treasury auctions has increased. Rick has talked about how some of the results have been worse lately. So do you think that's what gets us a 10-year at 3.7%?
Ms. Weiss, I don't see your email. Where'd you send your email
that is the key
to?
rate for our entire financial system.
I think you can make the argument, if you were just analyzing U.S. growth and inflation stats, you can make the argument, growth is slowing, inflation's moderating, the 10-year should go to 3. But for the reasons we just said, I can make the argument that the 10-year goes to 4.5 to 5. And if it did that, it wouldn't be for good reason. It would be because these governments and these central banks further
Got
lose
access
control
now.
of their
Okay,
bond markets,
thank you.
like the Bank of
I'm
England
able
did.
to.
There's one of the things
I'm
to
able
watch
to
right here,
access the
something called
Zoom file
structured
beginners
products.
traders
This is
from
something that was
Sunday
sold
from
heavily in
Google
Japan
form.
to people
Thanks.
who wanted
Yes.
more
If you
use.
can't access the Google
A lot of those are
form,
a lot
or
of money.
if you
You start to
can't,
see interest rates rise. Structured products
oh,
are
did
sold
y'all see
heavily in
that big
Japan.
old
We've
red
also
candle
seen them
just
to some
come in on
degree
pew
here
pew
in the United
pew?
States. So there could be a
Oh,
lot
wait,
of
won't he
individual
do it?
investors out there holding
Won't he
things that they
will?
didn't understand, that they thought were protecting them, but instead are going to hold them. And people are wondering, is that another tip of the iceberg? Is this some dark corner of the financial market that was set up to achieve A and instead is going to have terrible repercussions?
And it's kind of like what people say, which is we're still at the very early innings of this experiment where we said the entire global financial system was operating on zero rates, ZIRP, whatever you want to call it, for the last decade. And what's it going to look like now under, these higher rates? Also, what does this mean for the Bank of Japan? Do we view this, especially with the governor about to leave, as is this a sign of, hey, we did it, we were able to hit some of these inflation targets, so now we can back off a little bit? Or is this more of a moment where they say, we're just trying to disentangle ourselves and kind of let markets return to something more normal and more healthy?
Okay, well, we're looking pretty good,
and I do think the latter. I think they want to, the Bank of Japan also feeling all this peer pressure that everyone else is doing it except them in terms of tightening. And it is good to see some normalization, but a lot of things break during that process. And also these interest rate increases are happening with debt levels that are extraordinarily high. So the interest expense that all these governments are going to be paying on all the debt that they've accumulated over the last couple of years goes up a lot.
Japan has the highest debt to GDP ratio in the entire world. We spent a lot of the last crisis worrying about Italy.
Right.
Now, this time we may be thinking a lot more about Japan.
Interesting. And of course, we have our own debt levels to consider as well as rates rise. Guys, thank you. Really appreciate it. Michelle Caruso-Cabrera and Peter Bookvar today. Speaking of rates, since the end of October, the 30-year fixed mortgage rate has dropped a full percentage point. But today's fresh housing data shows it hasn't translated into better numbers on the construction front. And in fact, the sector may be nearing layoffs, a warning sign for the broader economy. Diana Olick has the latest. Diana?
Yeah, and Kelly, mortgage rates are actually now inching up again, but I'll get to that in a second. I want to focus on building permits, the report we got this morning for both single and multifamily homes, because they're an indicator of what builders see in the future, and those are the real headlines of this report. Now, single family permits dropped 7% in November compared with October, and were down nearly 30% year over year. This despite the fact that rates actually came down a bit in November, as you said. Now, when builders were filing these permits, builders still see affordability as a major hurdle, despite the fact that about a third of them are offering their customers mortgage rate buy downs. So that's a red flag. Then multifamily permits dropped a much harder 18% for the month, down nearly 11% from a year ago. This slowdown is a combination of several things: higher costs for construction, higher interest rates, increasing the cost of capital, and believe it or not, potential oversupply. There were roughly 932,000 multifamily units under construction in November. That's the highest number since December of 1973. And on top of that, we're seeing rents grow at the slowest pace in nearly 2 years. That's according to a new report from Realtor.com today. And did I mention those mortgage rates? All right, so the 30-year fix popped up 11 basis points this morning to 6.38%. That after hitting a recent low of 6.13%. just last week. What should I say, Kelly? Merry Christmas? I don't know.
I know. Well, I mentioned the layoff issue, but Annetta Markowska, of course, who has been quite hawkish on the labor markets over at Jefferies and has been right about the strength of them, put out a note today saying, hey, listen, these really could flag broader layoffs in the construction sector. And unfortunately, as we know, it's a leading sign for the rest of the economy.
Yeah, and it's so interesting because barely a year ago, I know you and I were sitting here saying we need more labor in the construction market. That's the problem. We can't get labor. There's not enough. And now suddenly things are just 180. So it's amazing how quickly this market cooled off just because of those higher interest rates.
Absolutely. Diana, for now, thank you. Diana Olick. Coming up, Nike and FedEx reporting tonight. Both have seen a dramatic reduction in earnings estimates in the second half of this year. Both are off more than 35% from their highs. We've got a preview of the results and how to position next. Plus, a look at the sectors currently trading at the biggest discounts in the market. This is one of them, down 37% this year. The Domino breaks it down for us coming up. As we head to break, here's a final look at markets where the Dow's up 117 points, about 1/3%, but the NASDAQ in danger of turning negative, up just a point right now as it contends with a 10-year yield up at almost 3.7%. We're back after this.
Going down, turn negative. S&P and all y'all turn negative, please.
This is The Exchange on CNBC.
here. And I chose to include these charts showing the percent gain since the year to date here. So you can probably visually just tell by looking at the two symbols here that they
you're building equity. So that's considered good debt. But then we all know the bad debt is our credit cards. And keep in mind, especially with interest rates up right now, you can be charged interest rates of anywhere from 16 to 25%. 25%, that's a quarter of your purchase. So making sure, again, that we avoid that kind of debt as much as possible. But also keep in mind, no matter what the debt is in a particular
Okay, I'm going to try CNBC. I don't know. We'll see. I'm switching over to CNBC. They're on break. So we'll see. Is that better? Did you all get the sound now? Okay, let's try Trader TV. I like Trader TV too.
Watchlist can help you keep track of securities you're interested in. To add a watch list to the left sidebar, select the plus sign, then watch list. When the default list appears, select the name box, then create watch list. Enter a watch list name. To begin adding securities, enter a ticker symbol in the symbol box, then select enter. Continue adding all the symbols you want in your watch list, then select save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab.
Okay, I'm going to switch to the Trader TV
you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then add to watch list. From the Scan tab, right-click a security and then add to watch list. And add a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Okay, tell me if you can hear the Trader
Thinkorswim
TV.
by TD Ameritrade is more than a trading platform.
Yeah.
It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better. And just might change how you trade forever.
Okay, you
Because
can hear
once
it, but you can't
experience
see the
Thinkorswim
picture
by TD
now?
Ameritrade, there's no going back.
Trading has changed
I'm
forever.
trying
as
to
a new
learn how
generation
to
of
share
investors make their
the
impact on
different
markets.
screens.
It's more important than ever to navigate through the frenzy of meme
I
stocks,
don't know why we can't see it. Okay, let me try. I'm going to try to share the screen again.
On trending names.
Let's see. I'm trying to share the Trader TV
Take control of your
screen.
financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Okay, let's try it again. I don't know. Okay, I don't want to do it this way.
Welcome back to Next Gen Investing. It's time for Under 30 and a topic that didn't even really exist a couple years ago, but has been revolutionary amongst the financial.
Okay, well, apparently I don't know how this goes. So I'll try to get fancy with it another time. Okay. Oh, well, I tried, y'all. I was trying to broadcast the TV and me side by side. I can't get it now. Hold tight. Now it's locked up. Oh, Lord. Oh, shucks. My Thinkorswim froze. Okay. Well, I'm backing out and coming back in. Maybe that'll do it. I'm just practicing all the little features because Lord knows they got everything. Okay, I saw that. I was able to get the sound, but not the picture. So let me keep working on it. Let me see. I'll figure it. Okay. All tight. I'm logging back into Thinkorswim, and I'll see if I can. Sure. I'm learning. Okay. Okay, I'm going to go back to CNBC and see. They go on break so often, though. Let me try Trader TV. I like Ameritrade.
At the end of the day, I will say this.
So the TV is back.
Hope is not a long-run strategy.
Let me try this.
And what we can take from what we saw in even pockets through,
I think I got
2022. I mean, you're looking at AMC, looking at, for instance, GameStop, which really started this trend. These were late January, late December 2020, early 2021.
Okay, they're talking about the meme stocks
we saw the
now.
super spikes both in AMC
You should
and
be able
GME.
to see and hear.
And then we see, of course, pockets of retesting levels at lower highs on the weekly basis. And I think that was based upon, again, trend, momentum, and volume. But now this year has changed. I think the elements of these meme stocks and investing.
Okay, you should be able to see and
I
hear.
just think that since there is now a dearth of money, there's no longer an abundance of money,
that
there seems to be a focus
TV
point on short squeeze strategies on lower market cap stocks. And hence we have Bed Bath & Beyond this year. And I think that explains why we saw that particular short squeeze occur earlier this year, because it is of lower market cap. I mean, right now, market cap right now is around $324 million versus, let's say, GameStop at around $6 billion and even AMC at $2.5 billion.
Yes.
But the same thing applies to all these stocks
I'm learning, y'all. I remember when I couldn't even share a screen.
You have to consider,
so now,
short-term
I can pull up the TV, I can pull up comments.
And when a stock like, let's say, Bed Bath & Beyond is losing, this is on a forward basis, $8.83 a share. That is essentially about 3 times its current stock price. That's technically insolvent. If you look at, for instance, AMC, they're expected to lose $1.09. That implies, relative to the share price around $5, a negative 21% earnings yield. And lastly, GameStop. $20 stock, just approximately expected to lose $1.32. It has a negative 6% earnings yield. I think that explains why we're seeing such underperformance now. As of late on Bed Bath & Beyond, second place AMC, and third place GME, because it's not losing as much money. But at the end of the day,
all those meme
you have
stocks.
to consider now there seems to still be a lot of momentum. I don't think this whole phenomenon associated with Reddit and meme-based trading has gone away. I just think it's gone into smaller market cap names, which again may not be necessarily names we've ever heard of.
You know, George, the word that always comes to mind for me when thinking about this space is surprise. And it caught us so off guard the very first time it happened. But each spike has seemingly been less and less ever since, as the market, the living being that it is, adapts and changes as a result. And, this is the embodiment financially of essentially screaming fire in a crowded theater with one exit. I mean, that's what we watched happen with so many of these names and that unfold and the crazy that ensued. But looking ahead, I'm excited for what to bring. You obviously talked about the macro differences. Money's not as cheap as it once was, and maybe this shifting to different style names, a little bit smaller. So we'll see what 2023 has to bring. But thanks to George Tillis, as always, senior markets correspondent for the Ameritrade Network. Always great insights. That's going to do it for Jenny and myself as well. Jenny, what a year 2022 has been.
It's been a busy one. It's been one that's definitely kept us on our toes. So thank you for tuning into Next Gen Investing all year long. We appreciate it from Alex and myself.
Let's walk through how to analyze a company's financials on Thinkorswim. To get started, go to the Analyze tab and select Fundamentals.
Oh, that's what I want to do.
Then select Enter. To download detailed analyst reports, select Download. By the Numbers provides balance sheet information and other fundamental data. Company Details provides summary takeaways on key metrics and what drives the stock. Takes a more numeric look at similar information. If you find any of the information particularly helpful, you can print it out or take a screenshot. For more demos on how to Thinkorswim, head to the Education Center on tdameritrade.com.
Thinkorswim has everything.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy. A measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. Thanks for being with us. So we've had some back and forth action here today. We were looking at things, stocks down for the 5th day in a row, but could we break that trend here today by the closing bell? So here it is right now. The S&P is higher by 12 points. 38.29 is the level, up 0.33%. The Dow is up 0.5% at 32,927, up 169 points. The Nasdaq is up 3 points at 11,087, and the Russell is up 15 points at 1753. We are also looking at some of the biggest stories in the markets, and we welcome in Renita Young, senior markets correspondent here on the TD Ameritrade Network. Of course, Elon Musk in the headlines today. We have the very latest about the Twitter poll, and tell me a little bit about what's going on there.
Well, Elon Musk is in the news today. A CNBC report, Nicole, says that he's actively looking for a new Twitter CEO, which should not come as a huge surprise because back in November, he said that he planned on being CEO only temporarily, and he posted a Twitter poll on Sunday asking if he should step down from Twitter. You can see more than 57% said yes. He said that he would abide by those results. But less than an hour later, he tweeted, "No one wants the job who can actually keep Twitter alive," and that, quote, "there is no successor." In true Elon Musk fashion, he caused another possible Twitter storm and left people in the dark about his true intentions. But CNBC reports that their sources say Musk's search for a CEO, it's really been going on before he made that Twitter poll. So I'm guessing that as the story unfolds, we'll find out which came first.
Yeah, also just really who could run Twitter. I mean, that's been an ongoing question about a successor for him. How about Tesla? I mean, we're looking at multi-year lows now at this point, right?
Absolutely, multi-year lows. And today this stock is down more than 5%. Just overall over the past couple of weeks in the news has been is this Twitter news, is Elon Musk buying more or selling more shares of Tesla impacting Tesla? And so we can see that a lot of people, a lot of investors, a lot of analysts have begun to feel that way now. Tesla shares falling today, and many people think that those impacts are happening, including investors, including banks and analysts. Daiwa lowered the firm's price target from $240 to $177, keeping an outperform rating. The target cut, they say, reflects a higher risk profile from the Twitter distraction. And this company also is being cut at Evercore, cutting the price target from $300 to $200 a share. Mizuho lowering the price target on Tesla from $330 to $285. All cite in some way Twitter as a possible distraction now factoring that in to their price targets.
Yeah, and with this drop of 60%, it's its worst year on record.
Yeah.
A tough one, no doubt. Renita Young, thank you so much. Great to see you. Good luck there at Elon Musk, Twitter, and Tesla. Thank you. Now let's take a look at the bigger picture. Octavio Morenzi is with us, CEO of Apamos. Octavio Morenzi, what are your thoughts here? I mean, we've generally had a down arrow. This is looking like the worst year for stock since 2008. December is the worst December since 2018. I know we see a few green arrows here, but there's no doubt we've been under some pressure. Your thoughts about what we've been seeing and what might change?
Well, I'm afraid I'm going to be sort of a harbinger of bad news. I'm not sure anything's about to change that radically. What we've really seen is that central banks around the world, led by the Fed, have increased interest rates so far that they've savaged markets, and they've been both the equities markets and the bonds markets. I think the most interesting thing that's happened over the course of the past few days is the Bank of Japan now has jumped in. The Bank of Japan was a bit of an outlier. They were pursuing a very, very dovish sort of monetary policy and thinking they could promote their markets and their economy by keeping interest rates really, really low. It basically looks like they're throwing in the towel as well, and they're going to allow interest rates on Japanese government bonds rise to 0.5% cap, which is well below where they are now, well above where they are now. And that's put a lot of pressure on the bond markets around the world, where basically another major central bank is throwing in the towel and saying, we need to tighten money, we need to increase interest rates, and that's going to be bad for the markets. And we've seen that it had a follow-on effect on bond yields around the world, not just on Japanese bonds, but everywhere. Basically, investors are saying that means that sort of looks like bad news for all the other markets as well.
Yeah, and are you thinking that we might be retesting lows for the most part? I mean, do you see mild recession? The new year, January and February, are expecting some tough times?
I'm expecting, yes, to retest those lows. I mean, we've had a decent month, really. If you look back about a month, it's been okay. But I think we're going to see us retest the lows that we saw before that. And basically, what's going to set that off is inflation not coming under control the way central banks would like it to, and remaining sort of very stubbornly high, and the Fed having to jack up interest rates continuously through 2023. And that's going to be very, very bad for markets. And I think the thing that we might also see the Fed start to do, and they've promised they would do this for some time, is actually start to sell off their mortgage-backed security portfolio. Remember back in early 2020, when the whole corona pandemic started to unfold, the Fed jumped into the mortgage-backed securities markets and poured literally over $1 trillion into that market to support it. And that had a direct impact on housing prices and drove them up. Now, they've just sat on that portfolio. They've talked many, many times about drawing that portfolio down and starting to sell those mortgage-backed securities. They haven't done that yet. They're sitting on a 2.7 trillion pile of them. Once they start to sell that, they're going to drive up mortgage rates even higher, and it's going to be really bad for the housing market, I'm afraid. So I'm afraid I haven't got any sort of really good news. I don't know where the momentum is going to come from in 2023 to drive markets up. It would have to be lower interest rates, but I don't think the Fed is in a position to do that just yet.
Yeah, and at this point now, I think the move from Bank of Japan, and really they've ended that cap on the up end, which really means they could tighten further. And I think that sort of gave everybody an indication that things are not over yet at all, right?
Yeah, you're absolutely right. It's not just that they moved the cap from 0.25% to 0.5%. That's a fairly small increase. But when central banks start to move in a particular direction, they tend to carry on moving in that direction. So they carry on that momentum for some time. They don't just increase the interest rate briefly and then lower it again. This looks like it's part of a tightening cycle at the Bank of Japan that will go on for a few months or maybe even a year or two even.
Okay, so there's always something to do. What should investors be doing either here at home or looking abroad? Is it equities? Is it bonds? Is it emerging markets? Give us some thoughts.
Well, emerging markets have been savaged. The bond market has been taken apart. Equities markets have done very, very badly. I think the place to look at the moment is basically in very, very short-dated bonds or short-dated ETFs, so almost money market-like instruments, where you're not exposed to. But it's a bit like keeping your cash with you at home under your pillow, under the mattress. You're getting very low returns on that money, but those returns are increasing. So we're starting to see decent returns on very, very short-dated bonds. The problem with the longer-dated bonds is you have a tremendous interest rate risk exposure. And as interest rates go up, the value of your bonds go down. So that's not where you want to be. So I think at the moment, the smart thing to do is sit on cash or very short-dated bonds or ETFs that mimic that. And then once the central banks start to lower interest rates, be ready to jump back into the markets very aggressively, because then I think we're going to see things go up very, very quickly. But I fear that might not happen in 2023. It might be longer term than that.
And ETFs, you said, might be a way to do this too. Tell me about that.
Absolutely. So you can invest your money in an ETF that specializes in very short-dated bonds. I haven't got any names in front of me right now, but there's a whole bunch of them out there that you can do. That basically look at buying treasuries or corporate debt, commercial paper, things of that sort, that has very, very short maturities. So you're looking at maturities of under 6 months typically. And at that stage, you don't have much of an interest rate risk. So with the longer dated bonds, there's always a risk that interest rates go up and then your bond values come down. That's what we've seen over the course of the past year. It's been absolutely awful. There's been no place to hide. All asset classes have basically been suffering. So short-dated ETFs look like a good one.
Let me ask you this. I mean, this is just a big picture thought, because I recently spoke with someone who never put money in the market, and he was all about tangible assets and owns more properties than I can count. But, you know, you speak to other people who talk about the compounded dollar over 10 years, 20 years, 40 years, much better way to invest. Are things similar or different than years past? I mean, what do we tell young folks now? Should they be investing or buying houses and buildings?
Well, I think the housing market is a brave one to enter into right now. So that's, I think the thing to do is, yes, save absolutely, and save in cash as much as you can, and then jump into the markets once you see mortgage rates come back down and interest rates in general come back down. But jumping into those asset classes right now, I think is a very, very brave move. I mean, you know, I might turn out to be absolutely wrong, and I'm probably giving some people some really bad advice here, as far as the risk you take. But I think the balance of the risks look like asset prices are not going to recover anytime soon. I mean, there are some people in sort of esoteric asset classes like fine arts and things like that have done phenomenally well over the course of the past year or so. And that's been driven largely by the fact that at the high end, a lot of people want to preserve their capital and have been plowing into real assets. So you mentioned real estate, but things like fine art and collectible wines and things like that have done actually quite well. But those are very weird asset classes to invest in, and I'm not even sure how a typical retail investor would navigate those classes. Very hard to value a painting and things like that unless you really know what you're doing.
Exactly. I was about to say, you really need to know what you're doing if you're trying to do that type of investment. Octavio Morenzi, always wonderful to have you on the show. Thank you very, very much. We had a great year. We're going to see you in 2023. Octavio Morenzi of Optimas. Thank you.
Thank you.
Plenty more ahead here on the watch list. Wedbush initiated a group of names in the software space. You're going to hear why some of them are top
the reason there. The valuation is a little bit concerning to us. It's trading at a forward PE of about 19 times right now. And the last time it was trading at a PE of about 19 times was back in 2016. So the shares have gotten considerably expensive. And really it's because, the shift to defensive stocks, these companies, like you mentioned, have been doing really well over the past 2 years. But now we're starting to see some concerning fundamental trends. This quarter we saw the pet business, which has historically been General Mills' fastest growing segment. The pet business was pretty weak this quarter. Flat sales growth, volume sales were down 11%. And that's a little bit concerning because, like I said, that is their fastest growing segment, was a very profitable segment. And, even this quarter we saw the margins in their pet business really deteriorate. And although General Mills is confident that they can restore double-digit sales growth in their pet business starting next quarter, it doesn't look like that's going to flow to the bottom line. It looks like they're still experiencing a lot of cost pressures in that pet business, supply chain challenges in that pet business. So, I think over the next few quarters, investors might be a little bit disappointed in the operating margin line, just because costs are still, surpassing the sales growth, especially in that pet segment.
Yeah, you said co-manufacturing costs have been on the rise for the company. So it's not all great news. Pet business slower, the weakness there. But Greg, you said, look, hey, beat on the top and bottom line and a raise. The whisper numbers, what more could people want?
Okay, I guess you can hear me.
That's right. I think the analysts that watch this stock are getting a little bit greedy, Nicole, because you have a company that clearly is showing that they can manage the ups and downs of the business. They were able to produce the revenue, push through the price increases, just as industry watchers were starting to wonder about whether consumers were getting fatigued with these price increases. We see that General Mills can actually get the power from their brands and push those pricing increases through. So yes, there is actually some concern looking at the pet business, but when you have a portfolio company like this and a management team that seems to have a handle on things, there's a lot of opportunity for them to continue this
I had it
success.
figured out. I think you have to have.
And what do you say, Greg, about the 19 times earnings? So when you look at the forward look there, maybe it's gotten a little
on top of whatever you're trying to show
at that price point before the earnings.
And I don't know how you do the sound. If the sound doesn't come with it, I don't know.
Changed the way that expense looks on an
Okay, let me see if I can
line.
share.
So yes, I understand that some of that softening may temper some of the excitement about the potential going forward, but the fundamental story of the business is still a company that outperformed the pricing that's baked into that.
I think it's when I use that detached screen, because this is on my desktop, but the other, when I try to detach the TV, I think that's when you can't hear it. You have to.
I see. And Arun, is it General Mills? So now at this point, you have the sell rating. Do you think you'll bring it back to a hold or something soon? Because you still note that it's a winner. I mean, you've seen the top and bottom line beats. You like the company. You've liked the company over time. Is it a sell back to a hold or something soon?
Let me go check.
I mean, yeah, potentially. We haven't been bearish on General Mills for really for a very long time. We upgraded it when the pandemic hit in March 2020 to a buy, and we just recently, we downgraded to a hold a few months ago, and now we did downgrade it to a sell this morning. But it's really hard to find buy ratings in the packaged food space. We've made several downgrades in the packaged food space over the past, let's say, 6 months or so. Valuations have risen.
So
a lot
I'm
of these
just
stocks are
watching
becoming
QQQ finish out the day.
And we just see a more challenging operating environment for a lot of packaged food stocks
see the chart.
over the next year. Really, if you think about it, these companies didn't really have to work hard to generate sales growth over the past 2-3 years. And now we're starting to see that kind of quickly start to change. I think over the next year, it's going to be much more difficult to generate sales growth, especially as demand moderates and these companies lap all these price increases from the last year. And at the same time, another point I quickly make is that margins are slowly recovering, or a lot of these packaged food companies are rebuilding their margins, but it hasn't come back to pre-pandemic margins, and I don't think that will happen anytime soon, because a lot of these companies are finding itself that they're having to buy a lot of the sales growth. If you look at General Mills this quarter, they significantly increased their advertising and promotional spending. I think a lot of packaged food companies will have to do the same. And that will, hurt the bottom.
So tell me about the others. Yeah. What about some of the others? And when we think of Kellogg and any of the others, I mean, Pepsi has a lot of packaged foods and snacks and things. I mean, are there
Pepsi's
any
doing
winners in the
great,
group,
though.
or are they all under this same pressure, inflationary pressure?
Pepsi.
I mean, it's yeah. I mean, in our coverage, we
Yeah,
have
but
we have a lot of
Pepsi had an
holds in our
nasty day
coverage. We do have
yesterday.
a sell on General Mills. We have a sell on Kellogg Company. We have a sell on the Hershey Company. Similar themes there. The few buys we do have are Conagra Brands, McCormick and Company, and Mondelez International. Those are our buy-rated stocks right now.
Ah, okay. Greg, what do you think? I mean, when you think about the buys and sells that you're hearing about in the staples overall, because we did see snacks do better. For example, General Mills even said that the snack division, they saw higher sales. Pepsi has told us about their snacks. You know, Arun's talking about some names that do actually have buy ratings.
I think it's...
There are really three things that we'd be looking for, and this is the same way we talk with our clients about the question is, one, does the company have brands that they can push out into the market? Because the brands are more resilient to the price increases and therefore offer hope that there's still some top line margin. The second thing we're looking at is brands that have packaging flexibility and the ability to push that through their co-manufacturing facilities. So that's why you see snacks doing so well, because there's so many different ways for consumers to consume and choose those products. And then the last thing we're looking for
I think
is
it's
companies
me and
that
how you
have
open
some
up that
maturity in their
window.
cost management programs. We heard about that with General Mills.
I'm trying to be fancy. I'm trying to like pull things apart and then open up different windows so I can toggle between windows.
In play,
We're not there yet. We're not there yet.
Yeah,
but I
understood.
I
Final quick thought,
can
Arun. I mean, what do
the
you say about
desktop up.
2023?
It's just
What do I
those
tell people?
extra windows trying to show you
We
those,
have
trying to
SCFR,
display
we have
those. I don't think the
underweight
sound
rating
comes through
on the
that
consumer staples
window.
sector,
I
and we have
think
a
that's
negative
what it
fundamental
is.
outlook on the packaged food
So
space.
like if I wanted to
we just
share
see,
the
the valuations are
news,
tough in that space.
I have to do
we're,
it
we're
from
advising clients to stay
here,
away from the staples space in
and
general.
I can't take it off like a
So
TV.
pressure's on. Arun Sundaram,
It's me,
CFRA
not you
Research,
guys.
Greg Portell,
Because I
Carney,
know
thank
when I
you
got
both
it.
very, very much. Wonderful to see you both. Thank
But
you.
I think I have
That's
to,
going to do it for us
only
here
the
on
way
the
I can
watch list.
share the
Thanks for being
news
with me every
is
single
from
weekday at 11
my
a.m. and 2 p.m.
desktop.
Eastern
I
Time,
can't
live from the New York Stock
detach
Exchange.
that
Thanks for watching. Let's see
gadget
if we
and
can
then
squeeze out a
display
win
it.
here
It won't
after
do it.
4 straight days of selling. Keep it right here. Market on close is
No.
next.
No. Say something, because I'm learning it, and I know from the desktop I can get the sound. But you know how you can detach one of those gadgets like the TV, the Trader TV? So I've tried to detach it, make it big, and put me next to it. But once you detach it, it doesn't have sound. So that's why you guys, I think, couldn't hear the sound. But you can hear it now because it's on my desktop. I think that's it.
Knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate
I think that's it. Okay, so you all see what happened today. There was opportunity. There was one. There was one. And then, you know, not so much.
Learning at its finest.
Unless,
tune in live or watch on demand.
or even hearing got
Head over
off
to
there. You could have got off any number of places.
TDAmeritrade.com/webcasts and start learning today.
So I see 1, 2, 3 clear opportunities that we could have cashed in
Thinkorswim by
today.
TD Ameritrade is more than a trading
And then
platform.
depends on what she does this
It's an entire
afternoon.
trading
Because if you bought in somewhere in
With
here,
innovation that lets you customize
69,
interfaces, charts, and
we'll
orders
see.
to your style
I'm
of
hoping
trading.
it'll break. It's down
Personalized
under
education to
70,
expand
so I'm
your
hoping it'll
perspective,
break
and a
down
dedicated trade desk of
to
expert-level support that will push
68.
you to be even better. It
Down
just
under
might change how you
68. We'll
trade
see.
forever. Because
We
once you
shall
experience
see.
Thinkorswim by TD Ameritrade, there's no going back.
It's me. Oh. So did anybody paper trade or do anything today? Ms. Weiss, we know you made money today. I made a few pennies and I went back in. I got an afternoon puts. So I'm trying to see how it's going to finish up today. Or if it doesn't finish up the way I want it with enough profit, then I will swing these for a few days. I have until the end of the year, till December 29th. So we'll see. We'll see. But now I'm not afraid to swing because I know she's coming down. So
but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied
Thank
volatility.
you,
For
Marilyn.
instance,
That's so
time
helpful.
spreads,
I'm telling
like
y'all,
counters
first of
and
all, I need
diagonals,
to thank you
are
all
designed to benefit from
seriously
increases in
because
implied volatility.
I think in
Iron
the
condors,
last
on the other
week,
hand, are designed to benefit
I must have
from
gained like
falling
8 or 9
implied volatility.
followers or
After
something. I
learning
don't
about
know.
the
I was under
strategies, you
600
can take the final
and now I'm
assessment
over
and test your
600,
knowledge. Head
608.
to the
So that's
education
a
tab on
plus.
Thinkorswim for the full
And the
options
watch
volatility
hours
course
have gone
and
up.
a
I was
whole
so
lot more.
behind the watch hours, y'all. It was so sad.
Has arrived on
But
board the New York
the
Stock
lives
Exchange,
have brought
new
me like to
location
where I'm
with access
supposed
to
to
the
be.
biggest newsmakers
So
in
I'm
Wall
more
Street,
than
bringing
halfway
new
there. I'm almost
in-depth
halfway
market
with watch
coverage and
hours.
real-time
The
trade
watch hours
ideas.
were killing
Do
me
not
because I
miss
wasn't getting
our
a lot of
exclusive
watch
interviews with
hours.
CEOs,
The
bell
videos
ringers,
are
traders,
short.
and stock pickers,
So
keeping you
this has
informed
been
as you
helpful.
navigate your
Just having
Don't
this
miss
forum
Trading 360
has been
at
very
11 a.m.
helpful in getting me
Eastern and
caught
watch
up.
list
So
at 2
thank
p.m.
you all.
Eastern,
Thank you
live from the
for
New York
helping
Stock
me.
Exchange,
Thank
only on
y'all.
the TD Ameritrade Network.
And that's it. I'm gonna sit here. It's 3. It's 1 more hour. After today, I'm gonna practice. Frank knows how to make the template for orders, so he's gonna go over it with us again on Wednesday. I need that because today when I made my orders, I was too nervous to put in the stops. Just need some more practice. So I'll be happy to practice again on Wednesday with creating the template. And I want to create it and let somebody look at it and set it and forget it. Because I think I always want to stop out at 20. I don't know. I think I always want the stop. I don't necessarily need the limit. I want that stop. I want that stop to stop me out at 10% or something reasonable. So that's what I'm looking forward to doing.
Apple very close
Thank
to
you
the lows.
guys. Thank
Tesla
you,
having its
Marilyn.
own
Marilyn, you have been so
dip,
helpful to me.
selling off
Marilyn told me don't forget to
6.5%.
put up
search for
the
a CEO,
abundance quote.
reportedly,
And I
we'll
think
talk about
somebody
that in a
else
sec
told me, I
Twitter,
think
but
in one of my
right now
videos,
the market
I said,
not
and
really
please
caring
make
so
a comment.
much,
It helps
still
my tiny
punishing
channel grow.
Tesla, it seems,
And I
by
can't
price
remember if it was Marilyn
Elon's,
or someone else said, well, first of all, don't refer to it as a tiny channel.
Are we just seeing Tesla act?
It's those
it
little
oftentimes
things that,
does,
just the love. So thank y'all. Because it has been, my trading has been so much less
That's why I'm watching
stressful.
Amazon and Apple,
It's stressful when you
which
do it
are
by
nearly
yourself.
at lows.
You
Apple
know,
about
it's
a buck
stressful.
away from making a 2022
But this has
low.
proven to be
And
way
Amazon's
less
already done it
stressful
this
for
morning
me.
before flipping positive. All right, so the big news is the Bank of Japan, as we see, the
Yep.
yen
Thank you,
surging.
family,
That has the
everybody
dollar
for
under pressure.
contributing.
Definitely a different
Oh,
relationship
I tell
there.
you, I would be
No
lost,
euro
but I can't
pressure,
wait to
not the
get
pound.
face to face
Nothing
on
dovish
Wednesday
from the
because I
Fed.
really do
This is
want
a
to put in
surprise
place
move from
what
the most
C-Bar
dovish central
started,
bank
and Frank's gonna
in
wrap
all
up
the
and show
developed
us
world.
exactly how to do the
And it
template.
definitely
And I want
means
to
that we are
practice my
in a
templates,
sea
y'all.
change era
Because
of central
okay,
bank
studying
interest
and
rates, for
watching
sure.
and sitting all day is great, but
Corona
this is
doesn't want
not
to
the
call
way
it a
it's supposed
hike,
to be. You're
but
supposed to set it and
it
forget it.
effectively is
C-Bar and them out doing
allowing
whatever they
a
want to
little
do.
bit
They're
more
out
free
enjoying
market
their
action
life, and I'm sitting
in
here
bonds.
watching.
Now,
But
if you've
I'm
been following
grateful
along,
that
the
I
most interesting
did
thing these
it
last
this
2 weeks
way because I
has been
learned so
the
much from sitting here
breaking of
watching.
correlations within some of the big macro asset classes.
So let me
We've been
pause
talking a
this
lot
because I'm
about
about to go
how
check
the
on this
stock
money,
market
y'all. See if
has
I
not
can
really
get out
been
of this
responding
trade
to lower
tonight.
rates. Today, you've
We'll
got a
see.
different example of a relationship
Maybe.
breaking, and it's between
Maybe.
bonds and the dollar. Look at the way the yield is
If it keeps
bouncing
going
right
away,
off
if it gets under 269, I could get
3.5%.
out of here
This
tonight.
is the 10-year index TNX, which
I
means
could get out tonight with a
multiplied by
profit. It's
10, so
269.29.
don't forget also the 10-year futures you can trade now.
269.32.
/10Y.
If it breaks
So,
under
the bottom
269
line
before
is
the
you've
end
got
of
rates
the
waking
day,
up a
I
little
might be able to
bit. I do
cash
think
out
this is a very
with another little
meaningful
profit.
bounce.
I'll
We
let
just
y'all know.
can't seem to break down through 3.5.
It has to get under
Look back at that
269
chart.
though.
That's the summer high. That's a line that I've had there for some time, and it's actually holding. It's pretty simple. No real chart magic here. Just looking at important levels. The fact we're bouncing off
268.88 would be
3.5%,
beautiful.
even as the dollar is down right now, tells you that we are definitely
268.88,
changing
and
a
we're
little
at
bit from some of the
269.40.
cemented relationships of the past year.
Let me pull it back up
Let's
so
look at
you
that
all
chart.
can
We'll see
see.
3.5%. It's a big deal. There
it is. Thanks, guys.
268 anything.
On the way up, when we had a
Would be
little brief
great
pause
for-
there, that was a sign
Oh,
here that this is an
shucks.
important level. Now we come back down, can't crack through it. If we don't go back down
how about
through the summer highs, then I think we put them behind us. Talk about this more later on at the end of
No,
the
I
show
think
as we
we're
cut
gonna-
the cord on some of these new developments
Revisit
here.
some
But this
summer
is really
lows, not
important
no
because the
highs.
10-year is finding quite a bit of momentum here to the upside, while you've got the dollar down 0.2%. Now, day in and day out, you don't necessarily have to have the dollar and rates doing the exact same thing, but over time, rates follow the dollar. That's been the case over the last year. It's been a very crucial relationship that has really been kind of the guiding light for everything. Because from the dollar, you've been able to project rates, and then from rates, you've been able to watch stocks. So we've already seen that stocks and rates have broken down a little bit in their very reliable relationship. And now it looks like bonds and the dollar could be doing the same. And it makes some sense. Think about why what's happening is happening. You've got a surprise hawkish move from a central bank that's not the Fed. You already have other central banks that have been observably tightening policy, now on pace with the Fed doing an equal 50 basis points. So the incrementally more hawkish surprise from the Fed certainly tightens up the global economy more, and investors sell off bonds because the Tina trade of no alternatives is
Stephanie
really
is
now
on right now. Oh my
evaporating
gosh,
before our
I'm
eyes.
torn.
When
Stephanie
Bank
is
of
on,
Japan
and
is
she's
turning hawkish,
asked your
that
book
Tina trade, there is no
and
alternative.
YouTube
It's officially
questions.
dead.
Holy
bonds sell off
smoly
as a whole.
cannoli,
But
hey,
because the marginal
I'm torn.
tightening surprise here is not coming from
Front
the Fed,
ratio
the
or
dollar
Atlanta
drops.
verticals.
That's a very different change of pace. It means that even if the Fed is not the leader
Entries,
on the global
scaling
stage of
exits.
central bank
Oh,
aggression,
this is
it
interesting.
is not necessarily a
Scaling
moment
in
of
and
relief
scaling
for risk
out.
assets
That's what
if
they call
bonds
it, like
just
when you
keep
leave a
selling off
runner,
anyway,
where
because
you may have
everybody's
3
dealing with the same
contracts and you
issues.
close
It's a really
out
important
one,
point.
you're
It's
scaling
only a day
off,
here where
or you
this
can
is
scale
happening so
in.
obviously, but if it continues, it's going to be really, really important.
That's a good video.
I
Only
want to
thing,
also point out for
TD
traders that the
Ameritrade
VIX is
videos are
down today.
long though.
Stocks
But there
are
is
not
one.
really
If you
picking
guys
a
want to know about
direction, but we still
scaling,
have
I
plenty
can
of back
grab
and
that
forth,
video.
and VIX is
High
down.
probability
Notice
option
also as the S&P
trades
is pulled off
at
from the
technical
highs of the
support. See,
past
this
month.
is this.
The VIX
Y'all
has
getting this
also
video. I
actually
need this
been
video.
trending lower. We've got lower highs in the VIX from
This is a
30
good
days
one.
ago. We may not be
This
at
is
the
what I
lows
just
for VIX, but
learned
we're certainly not
about
at the highs.
getting
You
in,
might recall Jim
entering
Carson from
near
high volatility
support is
told
making
us
my
to be ready for
entries
something
so
like
much
this.
better. I'm
He's been
losing
pretty spot on with a
so
lot of big
less.
important vol
I mean, my
dynamics.
losses
He
are
told us that
just
even though he sees
way
downside
more
for
in
equities over the
line
next month,
because I'm learning
buying
to
VIX
use my support and
calls
resistance
may
for
not pay
entries.
off the way you hope
I don't know what I was
if
doing
you're trying to
before.
bet on downside, as volatility is well supplied, according to his words.
I'm
So,
gonna
go
drop
back
this
watching
video
Jim
on the
Carson.
community
The point is, it's
tab. It's a
happening in
good
front of
one.
us
It's
right
one
now.
I need to watch.
And that's also notable because if you're trying to bet on downside in some of these big tech names,
And
you're not
this
really
was
hitting the ball out
about
of the park right now. If you're using
support
ETFs
and
as a
resistance,
broad-based tool to bet on
using
downside, you're not really working if you're
technical
buying calls on
analysis for
VIX.
entries.
So it's a pretty tough market to trade here, especially as all the relationships get mixed up. And right now, VIX not playing along as you might expect. I want to point out also, the worst performing sector today is consumer discretionary. And just given the market cap skew of big tech and mega cap consumer companies, it's just going to be really tough to stage any meaningful upside. 10 out of 11 sectors are higher on the day.
Y'all, I hear
But
the weirdest
well, now it's actually only
noises
7, so we were softening up a little bit here. But the fact
I
that
hear
Apple
all
and
kind of
Amazon are down at
animals.
the lows should call into question a little bit.
I never heard
here,
before.
that Tesla's pain is just Elon's fault and nothing to do with the big picture. I find it a little hard to believe when these two crucial stocks are about to make lows at the same time. All right, let's bring Renee on.
What is
Ken
that
Hanks,
noise?
let's talk about what's happening here today. But Ken, get us started, okay? Looking at the way bonds and the dollar are related
turn this
today, it's a
down.
little
Wait
bit
till
of a
I hear
different
something.
type of.
Maybe it's somebody sweeping. But when I tell you all, I hear the weirdest sounds. Oh my gosh, all kind of animals
exactly,
y'all never
Oliver.
heard of.
In a year where hawkish central banks basically did
Okay.
without
Marilyn, that's such a
the
good
Bank of
question.
Japan,
I try to buy, if I'm buying a call, I try to buy near support because I know that it will at least kind of slow down near support and it won't just break through. You know, it won't just dive down and turn against me without some kind of resistance. If I'm buying a put, I want to buy it near resistance because I know I kind of have the ceiling protecting me. Oh, who was it? L? Oh, I'm sorry. So L, I buy near resistance because I know that ceiling is there and it won't let the stock price just shoot up and get past me. So that's about all I know. So what I did was I put the video under the community tab because I think, of course, you know, it'll explain way better than me. And so the name of the video is High Probability Options Trades at Technical Support. So short-term option strategies. It's buying an options contract near support, whether support or resistance, but you're buying it near there as a way to protect yourself. So puts, you want them to be near resistance, and a call, you want it to be near support. You want it to be right above the support so that maybe it'll get a bounce and go your way, but it's certainly, you don't want to see it just dive down. I hope that makes sense. Yeah, but watch that video because I'm going to be watching it too. I'd heard people say it, but it never made any sense to me because I couldn't see it. I couldn't see it. I needed to do it. I needed to just do it. I did it one day and I'm like, oh my goodness. That's why my trade didn't go south. I've made some bad entries, you guys, not knowing that, but I hope that helps.
Have a lot of debt. They're carrying a lot of credit cards.
I'll put the
and so we're just seeing that.
I'm used to being called someone else's name. Family does it all the time. I'm sorry, Elle. That happens to me too, because you know my name is Sandra. I've been called Sandra, Sandy, Sandria, you know, all of it. And I just answer. I'm particular about calling somebody by the right name because, you know, that's just respectful, but I don't trip about it.
That we see
and they used to call me and Sonia each other's name all the time. We just got, it was so crazy. We would just answer. She answers to Sandra, I answer to Sonia. It was crazy. Okay, let me go check on this trade.
Because the yield curve's been getting destroyed. Is there any reason to think that could change here? I mean, we're
okay, it's cooking. She cooking. She cooking. I wish she would just come on down. 269.
Yeah,
to like 269.
Are going to affect
anything under 269. Come under 269. Then we could for sure go home then. If she gets under 269, 269.32, 269.31. She wants to break it. She wants to break out. 269, break it down, not out, not up, break down. But these little teeny red candles,
there was notes there.
Let's see.
So yeah, discretionary.
269.34. I'll bring you guys back online. Oh, yep, we just dropped down 29. That would be good.
It's turning into
get into some 20s.
You know, even. A big pillow fight here, Oliver, because no one can really decide which way they want to go. It's kind of a mixed market. There's some up, there's some down.
I would love to see a 268.
It looks
in here
a lot like a holiday market to me, Oliver.
Yeah, energy up 1.5%. Crude oil pretty strong again today. Let's talk about where there is some conviction here. I think we're gonna get under
268.
Down almost 9%.
We'll see. I hope so. I hope we get under 268. We're 269.36, 269.40, wrong direction.
Reminder that even as the market's been kind of quiet here, we've still had some blow-ups in the weak stuff.
We'll
yesterday,
see.
Carvana got slaughtered again. I mean, it's down another 6%. Stitch Fix down 9%. It's like the quieter things get, the worse it is for the companies that have done really poorly.
It is, because this stock is down 85% year to date.
Yeah, my entries and exit, L. Oh, it's amazing though what you don't. But L, what's really even more amazing is the fact that I was able to make money not knowing it. I'm telling y'all, just finding that trend and practicing getting in and out. But what I was having to do, what would happen is a trade would turn against me. A trade would turn against me, and I would, you know, I would be trying to figure out why. Well, because you weren't paying attention to price action. And then somebody else said to me the other day, he hasn't been back. I don't know if it's a man or a woman. Hermano said, pay attention to volume. Changed my whole world. I'm paying attention to volume, but not when it was getting close to like support or resistance and how, you know, another little tidbit. I'm telling you, every little bitty piece, it's like, oh my God, I see how that fits. I see why that works. Just those little things.
to talk a little bit more about the big picture situation here.
Oh, yes, I miss my buddy. Yes, but I wish her well because y'all know Sonia is a filmmaker by trade. She is a screenwriter. Sonia is very gifted in all things media. And so when an opportunity comes, you wish your friends well. And so she's working with a producer friend of hers back in Texas. So who knows? It might be a movie premiere soon. I'm just saying, who knows? We could all be going to a movie premiere. I don't know, but yeah, that was kind of bittersweet. But I understand opportunities too. So, we'll see each other. I think we're going to try to catch up with each other in Thailand or somewhere in Southeast Asia.
Stop fighting the tide.
So you guys stay posted. Keep up with us. You'll see.
To combat inflation and get it back under control.
Normally, over
I gotta
the past
call
year,
her today
if,
too.
Traders or investors see the dollar going down,
just to
we
check
assume it's a
in.
good thing. We try and buy stocks.
Okay, so QQQ is at
269.63,
269.63, and I need her under 269. The lowest I see coming is 269.47. See 30,
companies and how
see a
globalized
35 in
world
there.
has become.
Oh, I saw a
think it
30.
hurt a lot of
So it does. It's making its way down, but it needs to get down into the 20s for me to feel like it's
for U.S. companies. So I don't think this is necessarily a negative thing.
The lowest I saw
the dollar surge when the
was
Fed
like
was being
30.
most aggressive, but a lot of central banks have gotten in line.
Oh,
and
there's a
hiked
20.
rates just
Hey,
as fast,
hey, and a
just like we saw
26
last
too.
week with the
Okay, so
EU
it's going to get
Bank of
down.
England, and now
Who knows? Maybe it'll work its way down to, because if it gets down to 269, I saw a 24. I may check out 269, 24. We'll see.
Inflation and get it back under
That's the
control.
lowest I saw at 269, 24.
Occurrence,
Oh, there's a
that the market
2.3.
is also defrothed and sold off as we
A
pivoted
2.2,
for
a
interest
2.1.
rates. But I think there is still
Oh,
some
shucks.
surprise.
Hey, y'all, we might break down under
analysts
there
and
because these
investors
values are
who
getting
have been
pretty
watching
low.
companies that are down 50,
So we'll see.
60%, make it 70,
I'll check the
80,
price when it
90%.
gets
We're
down to
just talking companies like
269,
Looks like some of the stuff is going to zero in this environment.
269. When it gets down to 269.25, I'll check and see if I can get out with a profit at that point. But I know anything under 269 is profitable. So we're just a few pennies away, just a few pennies away. So who's going to be here next? I know somebody is coming to town soon. I want to say somebody sent me a message. How do you plot figure out support and resistance? Oh, Ms. Weiss, I do it manually. I go through and look at I go through all the time frames. And is Shauna here? Oh, I missed. Wait a minute, did Shauna come back? So Ms. Weiss says, how do you plot figure out support and resistance? I'm gonna flip to it right now. Let me know if you can see and hear me. So I'm just gonna come out of this. I'm gonna look at this on the hour, let's say the hourly chart. Or we could do it on a daily. I think my daily chart may already have it. So let's look at my daily chart. And I'm not the best support and resistance, but I do them because it does matter. So you can see these red lines. And let me move this out the way. All I do is look at the chart over time. I stretch it out. That's not meaningful to me, so I have to make it big enough so it's meaningful. Okay, hold tight. And for it to be meaningful, I need to be able to see it like this. And so I go in, generally I hit the low and I always drop a line because that's significant. And I generally hit the high and I drop a line because that's significant. And then I go in and start to look at where do these candles cluster. And you can see like some of the lines that I have, you can see where they just kind of like they bounce off of it. It's almost as if they test it. So in this case, this line right here would be support, because you can see this bounces on it, it bounces on it, it bounces on. It had a hard time. It couldn't break below it until finally it broke below in those days. But then you can also see that same line, these candles couldn't penetrate and come from under there. So in this case, the same line serves as resistance here, but it also serves as support right here. So I think that's significant. And else, I think somebody was asking, now, how do you use that for your entries? So if you were, let's say here, this is probably easier to see, and you wanted to buy a put, it would make sense to put it close or as close to this resistance as possible, because it has proven that it has trouble going above it. So if I'm banking on or wanting it to go south, excuse me, you guys, then it would make sense to purchase a put close to this resistance. And if I'm buying a call, it would make sense to purchase it right close to the support, because I kind of have the safety of, look, oh, it won't go lower than that. So I don't know if it was a good one to show you on, but let me look at the weekly chart. And let's see, here's the weekly chart. I think I have it plotted on my weekly chart too. But it's basically the same thing. You're just going to see where those candlesticks cluster, where the most you can run a line and it will touch as many candles as possible. And so here's a support or resistance line here, and you can see this is a week. So 1 week, 2 week, 3 week, 4 weeks, 5 weeks in a row. It couldn't get lower than this. So that's a pretty strong support, because it held up for almost 5 weeks. And that same line, let's see, where else? I don't know why I have these so crazy, but God only knows. They've probably been on here a while. But that one's a good one. I don't know about all these other ones. Let's look at we did a date. Let me look at my hourly chart. This might make more sense too. Well, you can't really see a lot on the hourly, but so maybe here. But you can see it's sitting. And then here they bounce under. So that's a significant line of price. I'll take them off and put some better ones on. Let me just get over here. I'll do it. I'll actually take them off and plot them on another chart. But that's how I do support and resistance. It's simply placing a line where you see prices concentrated and more candles kind of stay or stop, or you can see it. Like here, you can see it bounces off of here, and it's got stuck here, consolidated on this line, which is basically 270. So we watched it all day struggle. It had a hard time getting, first it couldn't get above 270. Did you see that? It couldn't get above. It tried, it couldn't, it tried. And finally, I think once it tested support so many times, it tested this resistance 1, 2, 3 times, it finally broke out of the resistance. And then it just started bouncing on top. Now it can't go under. It tested it, it couldn't go down. It tested it and tested and tested. And finally it broke that support and went under it. So the same line that serves as resistance for these candles, this is resistance. It can also serve as support for those candles. So I hope that is helpful somewhat. Most of us have had bad entries, yes. I know. Yep, Shauna knows. She'll be moving to Mexico. Shauna will be moving to PDC. Oh, yes. That would be, it's always wonderful to have new sisters come. We've been waiting on Shauna though, because Shauna supports us. Oh my gosh. It's just so beautiful. The love is so beautiful. So we can't wait for Shauna to get here. Sonia and I were talking about that. We were like, we giving her everything. We giving her the keys to the city because she has just been so loving and so supportive. And that's what it's about. So we come blaze the trail so that when you all come to a city, and I love it, when you all come to the city, you don't have to get to know all that stuff all over again because you have sisters who were there before you. It's what happened to me in Mexico City, and I'm so happy to pay it forward. I don't know if you guys know Patricia Clay, but Patricia Clay is just my travel. Well, she is something special. And she met me in Mexico City and was basically my private tour guide. You know, what more could you ask for? Just sweet, just sweet, sweet, sweet. And so she showed me all the best places to eat. Then I hooked up with some more travel sisters. So that's what we hope to do. Oh, you know Pat. Oh my God. Did you see her walk all the way across Spain and France, the Pyrenees Mountains? She is a beast. She's an absolute beast. So she welcomed me with such warmth, you know, and that's not always easy trying to work with the introvert because I'm an introvert, y'all. Truthfully, that's probably why this is so comfortable for me because this is easy because we're together, but we're really not, but we're together. So it works. But Pat was so sweet to me. And then I don't know if you guys know Kimberlyn and who else was there? There were so many wonderful Black women in Mexico City that embraced me and said, come on, let us show you a good time, that I am compelled to pay it forward and do the same thing. She did the Camino. Yes, yes. I'm not sure if she has a YouTube, but she should because her pictures are absolutely phenomenal. She's a great storyteller, and the girl can drink a margarita. We had a great time in Mexico City. We did. We ate good. We walked. We went to the park. She showed me all the things to see, you know, all the attractions. It was wonderful. So I can't wait for Shauna to get here so we can tell her and put her in the loop because it makes a difference. It makes the city a whole different experience when you don't have to worry about anything. And when people are kind, you don't mind sharing. Yeah, I think she just has Facebook and IG. But oh my God, you need to follow her. Oh, her travels and her pictures. I'm telling you, it's the pictures for me. Her pictures it's coffee table book legendary. The girl is legendary. So yes, so she was one of the first sisters to welcome me to a city and just, you know, show me a good time. So that's what we said we would do when sisters come here, try to show them a good time. Kay is here. Now, Kay is from Winning in Education. I think she poked her head in earlier. So Kay is here. And over the last month or so, I think maybe 5 or 6 sisters have come and gone. And I have had a good time. I promise you. I swam with turtles. I did it all. When people come, it's like I'm on vacation again. So I usually hang out and do all the touristy stuff with everybody. So we'll see. Speaking of which, me and Kay Burks, y'all know Kay. Some of y'all know Kay. We had the best spa day I have ever had to date in Playa del Carmen. And I promise you, if you walked past that spa, you would be like, I'm not going in there. I'm not going in there. When I tell you, the woman started with a foot bath. I'm talking about in a clay bowl. She poured hot water on my feet from a clay pot and massaged them. You had me at warm foot bath, ma'am. It was a foot bath, a body scrub, a massage, and a facial for $95. Where do they do that? I have paid so much more for so less, so little. I couldn't believe it. I couldn't believe it. The woman who did my service was such a sweetheart too. And Kay enjoyed hers too. So if you all ever, I tell you, I said what I said. It was a foot massage, a full body scrub with this scrub that they make, a sugar scrub with lemon and oil. Oh my gosh. Then a full 1 hour massage and facial. We left there, oh my goodness, in this right next door to a very easy restaurant, La Vagabunda. So when you all come, it's called, I want to say it's BRIC. It was in the Brick Hotel, and now it's on 38. Look it up. Look her up. It was wonderful. It was wonderful. Oh, no. No, no. Oh, look at this thing shooting up. What? You are, what? I don't have time for this nonsense. We back up to 2. We were down to 269.32. And now we up to 269.98. Really? Whatever. Let me look over here and see what's coming down the pike. So I have figured out that this time and sales information is relevant. And the way I have it listed, it's in order. So you can see the orders that are waiting to be filled. So it has given me at least some idea of what kind of prices, are coming. So I do see a 269.49. I think that's the lowest. 269.46. So I don't panic that the price is just going to shoot up, because you can see what it's going to be, what the orders are that are waiting. So it's been helpful. I don't know if that's how you're supposed to use it, but it has proven to be like, at least I can kind of see that we'll get up to like 269.92, and then we're coming back down. I don't see any 270s, so we probably won't. I see 95, 96. Oh, a 98, 99. Oh, I see a 270. I see one, and then it goes back down to 80, 70, 60, 50. So I see some 50s. We'll see. So at least it'll go back down. It doesn't look like it's going to shoot up to, like 272 or anything like that. Okay. So that's what I'm doing, folks. I'm just chilling. Marilyn, sounds like you had a good time today. 270.08. 69. 70, 60, 50. 49 is the lowest price I see. 269.49. So yeah. Marilyn, you can have cocktails. You can day drink all you want. Just don't day drink and trade. Okay, so let me get this out. Ms. Weiss, I hope that helped with the support and resistance thing. But there is a video, of course, I did a video on support and resistance where I point you in the direction of 4 lovely videos for support and resistance. But there's also one on the community tab too. I'll find it and drop it here for support and resistance. Trade management. Why it's so important to trade. Why it's so important. Trade management. Nope. I'm just looking for the video. Getting started with technical analysis. Do you all like Cameron May? I like Cameron. No mojito trading. Please don't do it. I promise you. It was such a rookie mistake too. Oh gosh. When I think back to it, I probably could have salvaged that trade. You guys, there's a thing called a roll over or roll out or whatever. But you can extend, like if you get into a trade, and I'm just telling you what I heard, because we know I'm not a teacher. I've only been doing this 4 months. I say that all the time because I never know who's in this room. And I don't want anybody saying, well, you know, she's giving out financial advice. No. But what I will tell you is that if you get into a trade, because it happened to me, and it was about to expire, you can extend the time, or you can adjust your strike price to give yourself more time for the trade to work out. It costs, but you don't have to toss in a trade. And my mojito trade, I tossed it in. I was so disgusted. I swear to you, you ever do something, it's like, just take it away. Take it away. I don't want to see it. I felt that way about it. I was embarrassed. So I don't even know if I could have or should have rolled it over, but I had invested so much money in the trade. I swear I just wanted it to go away. So I was just like, oh, we live to fight another day. So I think I found this one, options and reasons. I think I found the one. It's called Getting Started with Technical Analysis, but there's another one too. Using conditional entries and exits. We got that. Identifying key price patterns. Getting Started with Technical Analysis. I think that's one too. I'm telling y'all, understanding price, that's why I say stick to one ticker or stick to one ticker. That way, you know, you give yourself a better chance. I'm reading comments. My attention is torn. Oh, everyone I've come into contact with has been amazingly wonderful. That's good to know, Elle. I'm so happy. Yeah, don't do any mojito training or trading. This is crazy. Okay, so this is clearly going to be a swing. I'm just going to stay in this position. It'll work itself out because we're not that far off. We need about $1 for it to go down $1. I thought we would get under 270, but 270, well, you all can look at 270. You can see 270 is, for me, it's a support. I drew that line on, and it is proven to be pretty significant because QQQ just is kind of stuck in trading right around 270. She can't get too much above it. You know, she can't stay away from 270. I don't know. Just loves the price 270. But I do see 269.80s. I want some 20s. 90, 270, 260, not 270, 269.80 is the least I see. 269.80. So we'll see. I've gotten more comfortable swinging trades too, because you know the price is going to fluctuate. I think what was making me anxious about swinging is that I need to buy contracts that have enough time and that they are in the money enough if I'm going to swing. And so I think I picked great contracts today that are far enough in advance. The expiration date is the 29th, and they're high enough up on the options chain that I feel like this will be okay. I was trying to make sure I got how to find potential trade setups. I'm trying to make sure I got the right video because I'm gonna drop the link. I'll drop 2 links in the chat, and y'all could check these out. Using options. Technical analysis with Cameron May has to be good. Cameron is good. I like him. So let's see if I can copy this. Next. Command copy. I wonder if it's going to let me drop this. Okay, that's one of the videos. And Here's the other one. Beginner's Guide to Trading Double Calendar. I don't know what that is. Watch us place an example trade. Short put vertical. There's also a video on there. Somebody was asking about VWAP. And here, this one ought to do it. Using technical analysis for entries and exits. I think that should help. That should explain like the support and resistance of it all. What do you suggest? Volume should be high. I'm just going to tell you high. Okay, so let's look at it over here on this. This is over 100,000. Yeah, you just want a lot of volume. Black Girl Stocks gives an exact number, like what she likes to trade. So it is high. I will tell you that. The more volume, what? Look at this thing. You know, who asked you? This thing is going up over 270, 270, 20. We did this all day. 269, that's a whole dollar move. So let's see. I'm gonna Google it. What is the recommended volume for trading options? Options trading volume. I was just trying to see if I could find it on something. Seeking Alpha, open options volume and open interest. How much volume is needed to trade options? Trading volume must equal or exceed. I'm not going to repeat that because I don't know if that's true. How much volume is needed to trade options? Investopedia. Okay, Investopedia has an article. It says, why open interest in trading volume matter to options. I like Investopedia. So I do have a list. I didn't want to bombard you guys. In the Google Drive, I'll drop in like a list of websites and those other things. I'll drop it right in that drive. But why is open interest in trading volume? Why does it matter? Let's see. Daily trading volume and open interest are two additional key numbers to watch when trading options. Hold tight. I can share this. I think I've gotten that good. Hold tight, y'all. Let's see. Investopedia. Okay, Investopedia. And we're going to look up okay. And if I go here, let's see, I can share this screen with you. Share screen, Chrome tab, Investopedia, and share. So there we have it. I don't know. I'm assuming y'all can still hear me, but it explains why. So I'm just going to scroll through. Can you guys see it? Price movements. Let's see. Daily trading volume is the number of shares or contracts traded in a given period. When looking at options underlying stocks, the volume can give you insight into the strength of the current price movement. Trading volume in options, just like in stocks, is an indicator of current interest. However, trading volume is relative. It needs to be compared to the average daily volume of the underlying stock. A significant change in price accompanied by higher than normal volume is a solid indicator of market sentiment in the direction of change. But a big increase in price accompanied with low trading volume does not necessarily signify strength. In fact, that combination may well indicate that a price reversal is coming soon. This is why you need to know. Okay. So what do they suggest? Open interest. Okay, we wanted to know what amount of volume. Why open interest matters. We know why let's see, the bottom line, trading does not occur in a vacuum. Find your advisor match. So it didn't really say, give us a level. If it did, I didn't see it. But Black Girl Stocks, in one of her videos, let me see if I can pull that up too. Because she does, let's see. She talks about it. Black Girl Stocks volume. See what we come up with. Black Girl Stocks YouTube. I hope this is sharing. I'm going straight to her channel. Oh, I'm on her channel. Okay, so I don't think I can share this the way I'm doing it. Oh, I got to share another window. Hold tight. Because I'm looking for the video of Black Girl Stocks that talks about volume. Nope. Black Girl Stocks. And I think I have to change my sharing and share this with you guys. So let's see. I'm going to share the other page. You can see it? Okay. Well, it talks about, I can go back to that tab, Investopedia. It didn't give a number. It just says that why we need to know it. Daily volume, indicator. I like this part about if you see a big price change, but with no volume, that might be a trend reversal. That's important to know. Open interest. No. Let me go back over here and see. Can I Google recommended trade volume? Recommended. Options. Seeking Alpha. Maybe they'll tell us a little more. Seeking Alpha is another one. If you guys don't have these resources, Seeking Alpha is a great website. Investopedia, Market Watch, Yahoo Finance, Bloomberg, any of those. Options volume and open interest. What is trading volume? Okay, so trading volume and open interest are two metrics used to describe activity and liquidity within the options market. Trading volume measures the number of options contracts traded during a specific or specified period. Open interest measures the number of active options in the market at any time, those contracts. How do we calculate it? How investors use trading volume? I know it signifies liquidity. Investors can use trading volume as a measure of an option's liquidity, but should view other metrics as well. We know that. As a result, a single large purchase from an institutional investor might suggest broader activity than is actually occurring on that options. Investors should therefore use trading volume in conjunction with other indicators to interpret past and current price action. Yeah. Well, here are a couple of great articles, and I will drop those too, just in case somebody wants to read them. Let's see, command copy. Here's the web address for that one, for Seeking Alpha. And let's go back. I'll grab the one for Investopedia. Command copy. Command paste. And I'll see if I can drop them on our community tab too. So let's see. I'm sure I can. Whoops. So QQQ is doing her own little thing. 269.90. Yeah, she's just playing around. We'll give her time to break down and do whatever she's gonna do. Okay, so let's see. I'll put the articles on the community tab too. Oh, that's my cousin. God bless her. Okay. Hey, hon. Can I call you back? I'm live. I'm on YouTube. I'll call you back. Bye-bye. Okay, what am I doing? Community. Okay, so I put the one from Investopedia. And then I'm gonna go grab this other one. Now, copy. And I'll drop them in the Google Drive thing too, since I'm out here. Okay. Let me switch back over here and see what's happening. 269.80. I'll put y'all back over here. Let's see. Where are we? Okay. I'm going to drop those two things in our Google Drive, y'all. Let's see. Let me go to Gmail. Google Drive. Looking for, what's the name of that folder? Okay, well, I'll figure it out. Okay, what is this thing doing? 270.03. Okay, so it's only a few more minutes left in the trading day. Oh, perfect. Okay, cool. If somebody wants to drop it, and you guys can drop stuff in that drive too. So if you want to look at either one of those, but volume should be high. That's why I trade QQQ, SPY. The ones that have low volume, it's like watching paint dry. I hate it. I've done it. Oh my gosh. Before I got to you all, I did all kind of crazy. I would trade anything. I promise, anything. And I learned a lot. I learned some stocks I don't like. I don't like the way they move. And I don't want to sit there waiting all day it's just not fun. QQQ is exciting. God only knows what's going to happen. It's going to go up. It's going to go down. It's going to go sideways. It's going to trick you. It's going to fool you. It's going to do a ton of things in a day. I need that. I traded, what was it? I forgot what it was. It was some company I didn't care anything about. And man, I'm telling you, the price was ticking off like, oh, awful. So, but here's where you can find volume. You can find it on your, right up here. So this number means something. Oh, shucks. Did we miss? Did the day tick off? Okay, so I'm not sure. Volume, yeah, 124,800 to, I don't know if that's contracts, if that's sales, transactions. Perhaps that's transactions. And I'm not sure what the Y is. Year to date, I don't know what that means. So that's a good question. But I do know that the taller these bars are, that means volume. These bars represent volume by height. So we can tell that way. And then these numbers over here on the side. Maybe that was a low, a high and a low. I don't know. Or maybe it's whatever I'm pointing to. Like here. Yeah, that's what it is. This also depends on the bar that you hover over. Because this bar is one, or where you are on the bar. Okay, I see. Okay. I hope that was helpful. I hope that gave you some insight. And I'm back here looking at QQQ, just doing nothing. 269.60. And I needed it. I would take anything under 269. 268, anything would be a win. So as soon as it gets under 268, I'm going to probably be looking to cash out. I wish it could get there today, but no, looks like we are stuck right, around this area. So we'll see what happens. We'll see what happens with this swing. I'm going to definitely swing it. Oh, would you all look at that? Whew. We fall down, but we get up. That's so crazy to even look at. I can't. Okay, let's do it. Let's do it on the 1 hour and see what the heck happened. Basically nothing. I'm trying to. This was the activity for the day. Look at that. Flat line. Totally different from the other day. That was some good movement. This is basically nothing. Basically some sideways trading. A sideways day. Okay. Well, she did what she did. She came. She did what she had to do. Uh-oh, that's not what I'm trying to do. All right, guys, it looks like it's going to be a quiet close today. But I will see everybody. I'm not sure if I'm live trading tomorrow or not. Kay is here, and I think she and I may try to do something tomorrow. It depends. So I'll let you guys know. Check for me in the morning. I don't think I'm on live trade. I don't know. It depends. But I know I'll be here Friday like always. So we will see. I got to get outside. I got to get some sun. I got to go outside to the beach, to the something. When I'm in the house, I have to stay. When I'm trading, live trading, I have to stay near the internet. So I can't just be out roaming the streets because I'll lose you guys. But if I can trade from anywhere, if it doesn't go through, if something happens, that's on me. But if I say I'm going to be streaming, then I want to, do that. And I want to do it as best I can. And I can't do that moving around because the internet, you think it's spotty in this apartment. It's spotty. Yes, I need to get outside. I've been in the house way too long. And so I think tomorrow I'm going to go outside. Tomorrow is what? Wednesday and Thursday I may go outside. And then Friday I will be back for live trading. And QQQ finished up at 269.60. And we'll see. It keeps trading. It's one of the ETFs that you can trade 24 hours a day. QQQ SPY. And there's some others, I'm sure, but those two you can trade all day. I hope somebody got something out of it today. If you guys need me to pull something, some resources or anything, let me know. I'll pull it and drop everything in the Google Drive. If anybody can't get in it, just let me know. Email me and I'll make sure that I'll do my best to get everybody connected. All right, folks, thank you all so much. Thank you. It's always a pleasure to hang out with y'all. I can't believe y'all hang out with me like this. It's incredible. All right, see y'all back. That's right. I'll see y'all tomorrow night. Take care, family. Bye-bye. I'll see y'all tomorrow night at our Zoom. Adios, folks. Adios. Bye, Miss Vice. Bye, guys.